Hello, everybody. This is your good friend, Dr. David Proden, the safety doc. There we go. Getting rid of the echo. So, echo, echo, echo. Um, so, I want to do just a kind of a concise chat on stock market and finances because we've had a lot that's happened today and in the last few days. So, and then I have to stack firewood after this. But there are a few things I want to I want to point out because nobody really is covering these things, right? So I watched the news tonight, as I don't know, I should know better, but hey, it's CNT design, so you'll appreciate it. I even have some cardboard here. I'm going to draw some things out, like super pilotish. But once that cardboard is gone, I'm pretty much out of luck, man. So yeah, well, that sounds good. I'll check that out. CNT. Hey, it's Bolo. So appreciate you guys being here. Um, so yeah, another crazy day here in finances. It's Joe Morris. It's DLD. All right. Um, and I want to talk about so where things are at right now as far as like markets being down, and then also like if you own dividend stocks. Now, this isn't financial advice. I'm not going to mention specific companies. But I am going to point out a few things that I think are going to impact all of us, right? So, and it's amazing that on the news tonight, the leadoff story on ABC News is a former president is being sued by a state. Well, okay, but we also have this financial. We also have Ukraine, and we have somebody who is run over and killed because of their political belief in North Dakota. A young person, and those weren't your leadoff stories, but um, finances affects everybody, right? I mean, um, everything that we see in stores, jobs, layoffs, boom, and for my age, I've never seen anything like what's happening right now. So I'm 50. I'll be 51 in a month, but I've never seen anything like this. And this trend is alarming. I mean, I guess to put it it mildly, right? I'm a pretty easygoing guy, but so the the Nasdaq, right, is down 28.3% this year. 28.3%. Um, S&P is down 20.48% and Bitcoin is down 58.9%. But the you look at Nasdaq and S&P, and then I guess probably the Dow is down, I don't know, it has to be down 18% or maybe 20. That's huge. People, states run their pensions off of this. The government is also, trying to battle inflation. So as of now, the 2-year Treasury note, when I last checked, and it moves every minute, right, is at 4.123%. To That is incredibly high. To give you an idea, like at the start of the year, it was like 0.3%, and for like the last 10 years, it was less than 1%. So um, that is now over 4%. So how that works is, let's say you have $1,000 and you take out a treasury note through Treasury Direct account, which is free with the government online, and then the government pays you 4.123% interest for 2 years on that note. So you get $41.23, and then that would be compounded the next year another 41.23. So at the end of 2 years, they would return it to you. It's just direct deposit, comes back to you. So you give them 1,000, and they would give you $1,082 back after 2 years. So you get 4.123%, which is a very high return relative to the last, mostly 20 years, right? We haven't had anything kind of close to these levels. But that now is also setting up what the US is paying for debt on the national debt, and what they have to sell treasuries for to get people interested in other countries interested in these treasuries. So in a year, you could very well have that the biggest expenditure for the US government is interest on the debt, which would mean one of two things, right? You either have to raise your spending caps tremendously. And since I have this in YouTube, I can't put your chat up. So I'll come back here in a little bit, but I appreciate the chat. Um, and John's still saying real estate rates are still very much in the red, or real rates are still very much in red. Right, right. So, and so even like this, so the Federal Reserve, or the Fed's now 4.12% on a 2-year T-bill, which for the last 10 years was like half a percent. And it's like going fast. Like it went from 3 to 4, what, in about a month, and like overnight now it's gone up, um 1/10 of 1%, which is big in one day. Because we're talking hundreds of billions of dollars worth of treasuries, right? So it's happening to the 3 year. It really isn't hitting yet to the 10. It is, the 10 is up, but I mean, the 10, 20, 30. So these short term bonds are going up high. And that indicates there's a lot of instability in the overall economy, not just the market. Because if the market was unstable, your rates would be up pretty much the same across. A 2-year note would be up, let's say, 10%. A 10-year note would be up 10%. A 30-year note would be 10%. Your notes would kind of would, would be that way. It would be representative, but the short notes, the 2 to 3 year notes, are which are most attractive, right? Because people in big governments around the world, or other governments, big companies, they're not going to tie their money up for very long. They'll go and they'll put it into these short term notes. But to not get too complicated on that, I mean, I followed this for quite a few years, and I'm not a banker, but I mean, I've just followed this for many years, and treasury notes and things like that. Um, what this could mean is within a year, your number one expense in the US is paying interest on the debt. So you could either put more capital in, which just causes more inflation, right? You can print another $10 trillion, right? And now you can be paying off your debt. Although, now you're paying, these bills are 4%, and the bills you sold 2 years ago were 0.1%. So, you can kind of see where this is going. So, um, there is this point, right, when as you raise interest rates, things are supposed to slow down, but that's not really manifesting that way, because like gross domestic product debt is more than GDP. Back like 20 years ago, gross domestic product in the US was multiples. It was several times greater than the debt that the US had. Now the debt is greater than the GDP. So this is really unstable because it's a runaway train effect. And I think today shows the runaway train effect, that the fact that the treasuries are going up, that we haven't seen. I mean, some people haven't ever seen this in their life if they're younger. But then, housing, your mortgage will go up. Anything that you're buying, credit card stuff, all of that will go up, like you've never seen before. But let me get the chat, and then I've got my piece of cardboard, because I want to just point out a couple things, um, that are pretty basic talking points for, like, maybe like your 401k or a pension or something like that, that no one else is talking about, right? And I want to draw some of these things out, and then I also want to draw out where. So first of all, look at this. This is a $1 million bill. So holy smokes, we got things covered here. So yeah, there it is. This could be coming to you, DLD and JLM. Well, I've only got one, but says a $1 million bill. Yeah, it's obviously a spoof, right? It's got whatever. So don't come to my house thinking you'd take this and it's an actual bill. It's not. It's one of those comedy things that I think I got at a gas station when we were going to Florida or something. I saw it by the door, and I was like, they were selling these things. So, but it's kind of good for tonight's show. So let's get over to the chat. So Bolo, nice video in CNT. So, um, to CNT. He's saying to CNT because he posted a video. Joe Morris is in the house. So sorry I've been absent. Life has been crazy. Yeah, and DLD, this isn't like a show that I prepared a lot for. I'm going to kind of hit some points. So like there'll be regular shows, and I have a guest on October 10th who I'll be announcing, but she is a fitness trainer in the Seattle area, and we've been talking back and forth. She's going to talk about like if you're young and like you're trying to get fit, like here's what motivates you, and if you're a family or if you're older, and but I mean it's going to tie into my book, The Velocity of Information. Like if there would have been this whole approach of we're going to get the nation fit to try to ward off sickness, what might that have looked like? And she's really fun. So um, that's going to be October 10th. But let's go over here. JLM, hey buddy. I agree. Alpro Lemonton. I agree. It's bad right now. 2 quarters of negative GDP, rising rates, crumbling supply chain. FedEx CEO says it's going to be worse in recession. Yeah. Again, I've never one seen it this way in my 50 years. I've never felt it this way either. Um, and now it, there's just so many indicators. You watch these car show channels, and they'll be like, we get this. You could just take a part out of the box, right, and it would be good to go. Now the tolerances aren't matching up, and um, it's because they're not maintaining the machines right that make the parts. So you can tell that how this is all happening. This whole kind of entropy of systems. Um, it's really nuts. Again, never seen anything like this, before. But so look at JLM's got a wrench there. After so FedEx busted selling fraudulent. I saw that YouTube thing where the guy had that. Um, so true. This is DLD. True scary times. I could make a prediction, but I'd rather just inventory my ammo. So yeah, simple things are comforting in times like this. They are. Crowd in behavior. Surround yourself with uh, video games and things that make you happy, right? That don't cost a lot of money. That is proven during kind of chaotic times. So I just want to make sure I go through. Mike is saying, "Hey, everything revolves around finance, just like there's no romance without finance." JLM, I'd just be uh, I'd just buy Russell Tax Advantage if you're anywhere near 50 years old. Yep. Okay. Real estates are very much in red. John Steele, DLD. Oh, I totally get it. That wasn't me casting judgment on what Doc is doing. I think it's actually really important to look at the world as an economist does. That's how we predict accurately. Okay. Check your email and let me know if the move came through. Okay. Yeah. I can't do that at this moment, but I will check. So let's see here. I have almost no debt. This is DLD. I spent a lot of time and it's taking a lot of discipline. Just live within your means. But I wanted to do whatever I could to eliminate debt and better my cred. So John is saying, sorry, but MIA had virus. So I hope you feel better, buddy. And send me an email or check your email because I think I sent you some stuff. So, um, and also check your mailbox from back in April. So, um, your postal mailbox. So let's see here. All right. So let me get into it. So John is saying I bought a Bluetti and installed a 6-circuit transfer switch. Whoa! Wow. Okay. So I have two sides of this, right? So I'm going to use both, and again, this is explaining. So I don't think this is financial advice, right? This is just interpreting and making some sense. So this side, which this side I need to preserve because I'm going to have quite a bit of writing on it, but and I'll put this up. So let's think of if you have, okay, so do this. Um, actually, what I'm going to grab a light. May the light be with you. Holy smokes! So I am. Well, I'm just using like the headset today, right? But I'm ordering a Shure microphone and a different set of headphones. So should be quite an improvement down here in the studio. But for now, that's what we have. So we'll light things up a little bit here. So that's makes it a little nicer. Okay, so let's say that you have Joe. All right, you have um, uh, $10,000 in a retirement account, right? Let's just say that. And this could be the same whether it's a retirement account, 401k, right? Or if you have a pension where you work, right? Let's say there's $10,000 in it. All right. So we're going to put up here. All right. So there's our $10,000, right? So that's what you have. All right. Now, let's say something catastrophic happened. The, you know, let's say the stock market, goes down 30%. All right. So if the market goes down 30%, so kind of like our present time, just generally, let's say whatever you've got, however you've got it allocated in there, or however it's allocated for you in that, from where it was on January 1st to where it is today is down 30%. So let's say you have $7,000 as of today. Okay. So you had $10,000 and you have been putting away, in regular contributions, and there's some cost averaging, but you have $10,000 in there. Goes down 30%, you have $7,000. How much does this have to go back up for you to get back to just $10,000, right? Not that you're getting, and this whole time you're having fees taken out, right, of your account, and it's not gaining anything. So you have like basically dead time in that account. So if it takes, you know, 3 years to get back to 10,000, you've got 3 years where the account did zero, right? You might be putting money into that account and and kind of averaging out, but this money is basically doing nothing for you. Um, so you have $10,000, you're down 30, you have 7,000. Um, how much does this have to go up to get back to 10,000? What percentage? So anyone want to throw it out there? So you had 10,000, it's down 30%. You got 7,000 right now in your account. What percentage does this need to go up for you to get back to your $10,000? CMT, Joe, DLD, John Steele. John Steele has an abacus. It's very good. It's kind of just appreciates tactile math. So 11, 60. Okay, 40. So let me go through this. So Joe's saying 470, 40, 40. So, okay. So if this goes up, Doc might be grabbing a calculator here. So I just want to get this as absolutely close as I can. 40. Okay. So what most people think, right? What most people think when you show them this is, oh, it went down 30%. If it goes up 30%, okay, point 0.3, which is 30%. If it goes up 30%, I'm back. I'm back even. I'm back in the game. The only problem is 7,000, right? If it goes up, point, if it goes up point 0.3, that 7 times 3 is 21, 9,100. Huh. All right. So we had 10,000, goes down 30, gives you 7,000, goes up 30%, 7,000 up 30%. That's only 9,100. You're still down $900, right? So, as All Pro Lemonton has said, and Bolo, and you guys have kind of done the change here, you've got to, I don't want to write on my shirt because this is a good shirt and this is a permanent marker. You have to take your 7,000 and you have to multiply it by basically 0.43, and that will get you back to, all right, you'll want to screen grab this, man, because um, but this is the math that everybody misses. Everybody that I talk to, unless they're like a finance, they're in finances, right? They don't get this. They just think, okay, the obvious mistake, it's the fallacy mistake. $10,000 or it's 100,000, whatever they have, right? Goes down 30%. So you got 7,000. What do you have to do? Well, I just have to get back up 30%, Dave. And I'm like, that does, but the math actually doesn't work on that, right? You have to not go up 30% to get just back to where you were. In the meantime, you're having, if you're in a 401k, there's fees being taken out and these other things and whatever. But, or if you're retired, if you're newly retired, especially, but if you're retired and you're taking withdrawals, you're decreasing what you have in there. The same time it's down. So this 4.3 becomes even a bigger number. So, kind of right now, just right now, from what people had at the first of the year, in a lot of accounts, right? In a lot of accounts where you had a 60-40 split of 60% stocks and 40% bonds, a lot of that pension funds and a lot of 401ks are down about 30%, a lot, you know. So, you would have to have a 43% return on your portfolio to get back to 10,000. That's pretty crazy to think the market has to go up 43%, right? And everything that you have, right, has to kind of click and it goes up 43% just to get back to where you were. So this, if you look at models, right, I mean, it's very unlikely next year is going to return 43%. Um, and it's very unlikely the year after that any single year is going to return 43%. You'd have to have a run of a pretty good stretch, right? Um, to actually get back to just where you were. Now, there's more complexities with this, again, if it's cost averaging and stuff, but if you have like a static amount that you're not adding to. Now, there are some things right now, if you're adding to your 401k, you're adding while funds are lower and things like that. So if they go up, it's cost averaging, that can help you. But if you're later on in your career, right, and you've already kind of put the bulk of money into your retirement, or like these pension plans that are already paying out, 100,000 plus, people in their pensions, whether they be public or private or whatever, like they're going to have to cut their pensions. There's no way they're going to be able to do that because right now their pensions are down significantly. I mean, their formulas count on them making 8% a year. So again, this is the math. If you run this by people, if you're running this past, family members, and this is the point, right? It's really, it's hard to get back here, and you might lose years to get back to this point. Um, so what can you do about it? That's the advice. I'm not giving you the advice. I'm pointing out the math though, because I've also heard financial folks say, "Oh, the market." They'll talk in the market being down or the market being up, right? Again, if you looked at a sheet of paper and let's say the market goes up, let's say it ends the year at 30% down, and this actually is where things end up for the year, $7,000. So what was 10? On January 1st of 2022, January 1st of 2023 is $7,000. You've lost 30%. Now, if it goes up 30% the next year, you're just going, your financial advisor, right? They're going to look and they'll have a little graph here and they'll say, look, it went down 30%. Market goes up, it goes down 30%, but then the next year it went up 30%. You'd be like, oh, that's great. But is it really that great, right? Because as you pointed out, you guys pointed out here, Bolo 42.85, you'd have to get 43% just in that year. I mean, so now you're saying, you're going to have some time that you're going to have to put out there. And if you're pulling from this, it's bad news. If you're contributing, your cost averaging and it might be going down for you. But this is really pretty scary math that most people don't think of. So that's the first example I want to put out there. And then let me go to the chat. Is this helpful? Because I actually found this to be helpful because when I was early in investing, again, like I'm just a person has some investments like other people, right? I'm not, um, but I didn't think about things like this until somebody actually pointed this out to me, right? And I was like, whoa, like that makes sense, right? So to have how your expectations have to be calibrated once you're in this situation, right? And like, is this how realistic is this? And how do you have to adjust your own personal finances and spending? Because like if you take money out now, like you're taking this loss or over time, are you going to come back? That's where you got to make that assessment. And maybe if you're working with someone, but so let me look here to so yeah. And the thing, JLM brought up a good point. This doesn't calculate inflation, right? So in let's say that in 2 years the market returns a total of 43%, your investments, and you're back to $10,000 in 2 years from now. But in 2 years from now, we've experienced another 15% in inflation. So not you get back to $10,000, but $10,000 doesn't buy as much as it did, January 1st of 2022. It has significantly less because of the inflation that's going on right now. I mean, for many years too, like I remember inflation was very, very minimal. Um, and we had, technology was driving down the price of a lot of, TVs. You remember, flat screen TV used to be a couple $1,000s, and things got really cheap, a few $100. But um, so you've got inflation chewing away at this. I would say always check your fees if you're. I mean, something that you can't control, right? It's wherever you're working, and they say, "Here's the plan. Pick, options from it." And you're like, "These okay," but they're like, "And we're charging you, a maintenance fee to manage your thing." And if you get some company match, you're kind of in that, right? They're taking that chunk out. So um, I just mentioned the federal notes before because if you do a federal note, like a treasury note, like a T-bill, you pay federal taxes on it, on your interest, but you don't pay state or local. So that actually like that 4.12, like in my state, that would be kind of like a 4.4% equivalent to a CD or something, certificate of deposit. Um, so there are some tax advantages on federal notes, right? So we've got this down. Let's check. DLD technically about 65%, depending on a couple of things. 48%. So right, um, 5% just for loss, sleep anxiety, solve 7,000 times 10,000. Holy smokes, you guys. That's after you get to 88 miles per hour, though, depending on the flux capacitor. Yeah, uh, there's a part in this kind of dark figured out, if you can travel back in time with $10,000, and go to 1955, right, you're set for life. So it's a loophole in this, but all Limited. I'm supposed to know finance for work and was tricked. I'm not in a, I'm kind of in a financial field a little bit when I was managing school budgets and things like that, which are pretty rote. But I, I never knew this on my personal finances until, I was maybe in my 30s, right? And had worked for a few places and had, 401k that moved around and got, go to the next, move it there. And, and just in general, how you would hear about these cities or states that would say, "Oh, our pension fund now is in the red," or that we're having to cut payouts and things. And I'd be like, okay, like what does it mean for people who are taxpayers in that area? And also, like, do I want to live in that one of those areas? Because what if I move to a place that ends up where they promised all these pension funds and they can't do it, my property taxes or go through the roof. I have a friend in Texas that's sharing his experience with me on that. Um, John Steele saying 401ks are a scam. The markets are a fancy casino. So again, not financial advice. Uh, I look at the markets, right, and I remember the days when if you bought a stock, you would track it by looking in the newspaper. I mean, they would have the small print of like the top 100 stocks, and that would be so. Stocks weren't traded very frequently. Um, you didn't have this day trading and all this robo stuff and all these algorithms going in and trying to manipulate it. So that's different. And these you've had companies that just out of the like look at FedEx. Like, so if you're a FedEx like shareholder, or you've had, that's a big part of your portfolio, let's say. um, it went down last week in one day 21%, which was the biggest it had ever gone down previously in a day was 10%, but 21%, like that's, if that's a big part of your portfolio, and let's say, you had 20 years of investing in FedEx, or right? I mean, wow, like that just hammers. Or you have, uh, your mutual, they always tell you to be broad in mutual funds, own a lot of areas. But the problem is, like, when you own a lot of things right now, like what's really doing well, right? I mean, everything is kind of going down, right? So when you diversify and economies, suffer like they do now, I don't, you don't have a lot of benefit in that. Even you look at gold and silver and those things like that, but it's just an interest. I mean, it's like in forensically, if you go back, people can always say, oh, if you would have done this and that, but I think this is an interesting thing right here. Um, and so the thing is, right, invest in yourself, invest in you um whatever you have, if it's a house, if it's a vehicle, things like whatever you're paying payments on, pay that off. Because in this economy, when markets are going wild and interest rates and these notes are going up, your interest will go up. And why pay that interest into somebody else when you can be paying that off and not have that debt on your own, like Dark was saying before. So it's important to take care of business that you can take care of. um just in times, it's always right in times, but especially um you know this is crazy. This is crazy stuff. So let's see, band talk. And we are in a very rough spot. We're in a liquidity trap, and they have to rob Peter to pay Paul, which is true, right? um, you basically have to raise short-term interest rates to get people to put their money in other sovereign governments and big companies. But now suddenly, instead of paying them, one third of a percent, you're paying them 4% or maybe 5 or 6% on basically just a loan they're giving you to pay your debt and keep business going as a country. So it is a really tough spot unless you match this to some significant government cuts in spending, right? You can't. This formula really doesn't work as a country, because if you print off more money, right, into the system, you're going to have more, again, hyperinflation. The cost of things will go up, and this just keeps going. So yeah, okay, it's not $10,000 I have now; it's 100,000. My 100,000 goes down 30%, and now I have 700,000. But $700,000, will buy a car or something like that. I mean, so it's all kind of, you can see how this kind of falls apart pretty quick. So, so yeah, there are, those types of things, but I always just, tell people if you look at, again, anything that you're paying for, to try to pay that off first, right? Um, but again, it's not financial advice. I think that's common sense. Someone's like, "Docs, give financial advice." I mean, it's common sense, right? So let's go over to Bolo saying the personal saving rate is below long-term average. That is true. And also, last 30 days in the US, I believe, there has been more money taken out of banks than deposited. And that is that's new, right? And also, um, so money is coming out, and banks are paying around me about 3.6% on a 3-year share certificate, which is like FDIC insured or something, right? If everything goes, I don't think any of that is probably going to make sense. Or there's all these things like the FDIC can take years to pay it back. Um, but anyway, so that's pretty high. It's not historically pretty high. I mean, when I was growing up, I remember, CDs being 7, 8, 10%. But so you put your money in and they would give you that. You have to tie it up for like 3 years. But you would think, right? The banks have less money in them today than they had 30 days ago. That the banks would raise their rates, right, to get this money, but they're not because people aren't coming in for loans. So like, the car manufacturers now are having to talk about, do we do we propose a 10-year loan on a vehicle so people come in and it's manageable, for them. So people, the economy is really grinding to a halt. People aren't spending, or the products aren't there to buy, right? That's another thing that's going on. Um, so that's kind of a red flag, right? Why aren't the banks around you advertising and saying, "Hey, like if you have some money deposited here, and we'll pay you, that 4%, 5%, 6%, right, for this money that then they're loaning back out for mortgages, which are above 6%." So because they're not doing that, like no, I track, probably like 100 banks across the country. I mean, and it's more of just a hobby like thing I do, but it's pretty daily, go in and check, and it's not happening. So if the demand was there for coming to the banks and saying, I need loans for these things, the banks, right, would be offering these to people to keep their money in instead of people taking their money out. So anyway, that was my one math thing. So this is good to know because I think that's you have to think about this, how long it would take, and there's not much you can do in this situation except kind of monitor your own spending, right? You don't want to get further kind of in the hole with other debt and things when you're like, it's going to take a while, um, to probably get back here, right? It could take a long while, and in the meantime, when I get back here, $10,000 isn't going to buy the same 2 years from now, probably, unless there's deflation, right, and kind of an economic crash. Then you know, um, it's then the price of things would significantly, go down, but then there would be a lot of issues with that. So let's go over. This is something else I wanted to. I have a little note card on this one. Try to put this on here. So I wanted to talk about the uh, what what it is to own, stock that pays a dividend, because we hear that now. More, well, if you own dividend paying stocks and the market goes down, it's a chance to pick shares up cheaper, and you can weather the storm and all of that. So um, but let's actually kind of put some math to that, to do to conceptualize that with some numbers, right? So we are going to do, um, the first here, and I have to make this all fit, is that let's say you have a company that's $100 a share. All right. um, this is going to be a made up company. And so let's say it's, So right here, you there's a company called Superstar Incorporated. So and their vice president is John Steele. He's going to be probably named president pretty soon. But you have Superstar Incorporated, and you can buy one share in your trading account, right? Of whatever. One share is $100 of Superstar Incorporated. So dun da da. And you can look over time, like over 5 years, and Superstars kind of looks like it's trending up and whatever. And who knows what they make? Probably like they compete with Vandelli Industries, latex and latex related products, or smoothing, Kruger Industrial Smoothing, whatever it is. But it's $100 a share. So you own this company. That's and let's say that this company itself pays out a dividend. Now, many company, not many, but there are a number of companies that pay out a dividend, meaning every typically 3 months, if you own their company, they'll give you money and you can either just take that money, right? Or you can reinvest it into shares. Now, if you're like in a 401k, you have to reinvest it in shares. You can't get it out of there until you retire, then you can get it. But so let's just say that they pay a 2% dividend. You're going to find most companies will probably be like in that range of maybe like a 2% if they pay a dividend. Some might be three, and I mean if you see like a 10%, but that might mean the company price has dropped a lot, their value's dropped, so now they have to this dividend is high to try to get investors in. But anyway, let's just say this company, Superstar Inc., pays $2 a share for 2%, $2 a share um, dividend um, per quarter. All right, so here's where we're at. So they pay it's $100 a share for Superstar. If every quarter, every 3 months, they declare a dividend and they say, hey, if you own our company, for every share you own, we will pay you um, our dividend. So your dividend is what is annual. So this is $2 a year. So they're going to pay you every quarter 50 cents. So if you have 100 shares, right, you're going to get $50 every quarter. And then that would add in. So then, right, you could take your $50, you could buy a half share if this hasn't gone anywhere. If it goes up, you're buying less. If it goes down, like now, most stocks, you're able to get more shares. So this is a 2% dividend. So let's say like you're in a situation to buy 100 shares of all right, let's say you've got $10,000, right? So and and this is the thing too, right? If people are buying like individual stocks, these people go and they trade these individual stocks. It's kind of all or nothing, right? Because if it moves up, but if it moves down, right, it's kind of an all or nothing thing. But you have 100 shares of Superstar. It's $100 a share. You have to pay $10,000. So now you own 100 shares of Superstar Incorporated. So you're going to be getting that dividend, and they can change this. Most of the companies increase their dividend a little bit every year, like 1 penny or something like that. But they can also freeze their dividend. Ford Motor Company did that a couple of years ago. Walt Disney Company stopped paying their dividend during the pandemic. They said, we can't, we got to have the cash flow for other things. So, like this is a little bit fluid, right? So maybe the last 20 years they've been paying, but if the economy really goes sour, this could stop, right? They could stop doing that. They could decrease this, or they could just like be like Disney and say, we're not paying a dividend anymore. Um, so anyway, you got 100 shares here. And so every year you get, All right, if this was at all legible, you know what I meant. Um, let's go. $100 a share, Superstar Inc. So Polo's like, I think I know that company. It's in Canada. It was in Canada, but then they left for tax reasons. So now they're in, I don't know where they're at, but I think it operates off of a boat in international waters, to be honest. $2 per share dividends per quarter, So, and you're also like hoping when you buy this that this company will become more valuable. Part of the thing with the stock market over time is that more people put money in because 401ks are typically invested in the stock market, and this more money would come in, more money floats all boats, right? Um, so you have 100 shares, you have 10,000, you get $200 this first year, right? Because they're paying that $2 a share. So you get $200 in dividends. So at the end of 1 year of owning Superstar, 100 shares of Superstar, how many shares would you have if you reinvested your $200? What would you have in one? Oh my God, Bolo. So yeah, I got to make sure I keep this away from my shirt because I would be pretty disappointed if I got marker on my shirt of that's why I need a dry erase board, and I could use it for other university stuff I do when I kind of do stuff like this. But so this is another part of kind of what is going on right now, right? You're going to hear a lot of well, if you have dividend stocks, right, and um, you'll be able to reinvest your shares because let's say that you bought this on you know January 4th, right? You bought 100 shares of Superstar Incorporated on January 4th, and it was $10,000, and you're like, boom. So all of a sudden, though, like, oh, the market is going down, and your Superstar today is not $100 a share; it's like $72 a share, something like that, right? So you're going to have more than 102 shares because when you're buying your shares instead of at 100, you're getting it less. So you might have like 102.61 shares or something like that. So that's good. It gives you a little more shares than as it starts to come back up. Um, but this is how the model kind of works, right? If you have dividend stocks and they're reinvested, the thought is over time, like let's say that you're going to hold this stuff forever. You're like, I'm going to buy it and hold hands of gold here, diamond hands. I'm not going to sell this. Let me get the light actually where it's doing some good here. There, that looks a little better. So let's say you buy this and you're like, I'm gonna keep this for you know, long term. Even like I'm not going to do anything with this for 5 years, like with my Superstar. So you're hoping Superstar is going to increase in value, and so 5 years and you reinvest. You have 102. The next year you'd have like 104 point, and then these two, earn a little bit right of dividend. The dividend might increase. So in 5 years, you might have 112 shares, 113 shares, just by leaving it in there, right? So, that's how that works. So, right now, whenever a market is down, people will be talking about, well, if you're reinvesting dividends, it's a good thing because they're coming in lower. And now, if the price goes back up, like you have a dividend, you have a share that you bought at, you know, $70 versus like $100. So that argument kind of makes sense. But this is pretty slow moving too. Like that's another thing, right? As we said, if you're thinking you're holding this for like 5 years, I mean, if you held it like indefinitely, at some point you'd have enough dividends, right? That it would, even if the stock went down 50%, you'd kind of get back to where you're at. But then you're not getting any value of that money. That money's not doing anything for you. And you're kind of trapped into this stock, right? And then um, inflation hits and stuff like that. But that is something when they talk about they like investors, right? And financial advisors talk about dividend stocks, or if there are certain funds, right, that pay out a dividend on a quarterly basis and things like that, if you're able to reinvest it, there is some hope, right? There is some light at the end of the tunnel. Um, but this is something nobody pointed out to me in school. I mean, this was something again, a friend who was good with finances, brought this up to me one time and said, "Well, here's how this actually works, right? And you can take, different stuff, but um, you know, and over time, right, it's meant to help you cost average if the company isn't doing as well with its share price, I guess, or if the economy is kind of driving the company down. Now, if the company goes up, you're getting less shares. Now, if it's $130, you've appreciated. So instead of $10,000, oh my goodness, my shares are worth 130 or are worth 13,000 if this goes up to 130, and then you're also getting a dividend, but you're not getting as much because right, if you get $200 and it's 130 a share, you're getting like what 1.7 shares or something. But um, so these are things though that you're probably going to hear a lot about, and I just wanted to do what I could, right? Because I just want to say nobody did this for me. Um, and I think these are two essential points of understand. I wouldn't say investing. Not this isn't a show to tell you about investing, right? We're not picking, stocks and funds and things like that. But it's to understand kind of these big concepts, um, because I think this one right off the bat is is kind of striking. It's this whole thing called like it's a fallacy, is what it is. I mean, if you took um, even people again who have 401ks, right? And if you sat them down and you said, you have a $10,000 or whatever, it goes down 30%. How much does it have to go up for you to get your 10,000 back? You can probably guess. I mean, just in conjunction fallacy, we know like 60% of people would instantly say, "Oh, it went down 30%. Let's go back 30." But it's probably really more than that, right? If it was just a person on the street and things like that. So, and this might be something you can just share with, I don't know, people you care about who have finances and things, because um, again, I think it's not advice on what you should do, but this is a whole different number, right? Than 30%. Like 43 is different than 30. And if you look at like historical stuff with the market, to think you're going to likely get 43 back in the next year or two is statistically very unlikely. Um, so what does this mean on other things that you're doing, right? Like how if your financial picture, if you have this amount of money that probably isn't growing for you know a couple years, right? It's just going to try to claw its way back to where it was. What does that mean for you? And I guess it's different for everybody, right? But does it influence, if you're trying to pay down things now, trying to not take on debt? I mean, there'll be other people who will tell you, oh, now's the time to get in, right? Because you can buy a whole bunch right here. And then when it goes up, right, you're coming in at a lower price point. Um, but, you know, I guess, that's all decisions that people have to make. I think there's another part in this too, is if somebody who retired in 2000, like 2000, you know let's say 2017, 2018, right, they retired, and their retirement at that time they thought would hold them through for you know 30 years of life. Right, they retire and think they'll live 30 years, and their investments will keep going. Well, they got hammered, right? In in the first of all, their funds got hammered back in 2008 with the Lehman Brothers crash and with the housing crash. So that went down. In 2001, things went down with the dot com. But I mean, it's all kind of a timing thing, right? Because they would have been hit with the pandemic, so they're taking money out. Remember that, like these people are living on maybe so much a month is coming out or whatever they have, and it's not going back in, so it's decreasing as it's dropping in value, which the market always does. It goes up and down, but like things are really, really out of balance right now. Um, so, you have people now who are looking at their retirement, and, that maybe they were 60 years old in 2018, right? And they're like, okay, I've got got enough here to keep going, and if I just kind of get a market return, right, of 6%, things are looking good. There'll be up years and be down years. And then they have, the pandemic hits, right, drives the market down, eventually comes back, but at a cost of all this trillions of stimulus coming in and causing inflation. So, like, they're going and they budgeted out, this person budgeted out, they didn't expect their car insurance to double and their property taxes to go up 20%, in 2 years, right? And they didn't expect their health insurance to go up. So all of these things are up substantially. So, they might have had some cushion in there if something happens, but suddenly when all of your expenses go up. So these might be people who are very nervous right now. And they might be people who are also saying, I got to go back to work, or I got to pick up something, part time or whatever, because, um, I don't have time for this formula to work itself out. I'm taking money out of this right now to live on, as for the year, as for the, or for the year, what is it? Again, the Nasdaq down 28%, S&P down 20. Um, I mean, it's pretty frightening. So, um, there are a lot of people in this boat right now, where their money's gone. And like the thing that was different, right, in 2008, for example, the housing crash, was we didn't have inflation after the housing crash. It was pretty minimal, right? So the price of a gallon of gas, the price of a loaf of bread, right? Um, I had some house renovations done. I mean, things were pretty typical and affordable. There was nothing really significant year over year. I mean, I went back and I looked in our property taxes. Our property taxes from 2005 through like 2018 were pretty stable, like, 3% change or something like that. Pretty minimal stuff. And just this year, my property taxes have increased 16% just this year. So there's a lot of people out there who are going to be cutting back, and that is going to further slow down the economy, right? You have people who are like, I'm not going to be buying as much. I'm not going to be buying a newer vehicle. Hey, we're not going to put the shingles on the house, even though it should have it. We got to postpone that a little bit. You're going to have companies which aren't going to be calibrating their equipment as much. So, like, all the auto parts channels, when they're showing, oh, and by the way, like, if this is reversed, like, someone please let me know, because we've already gone into this, and I've had that problem with this camera. But I actually have a monitor screen over here, and I think it's okay. But you can see, right, that as people and companies aren't going to be spending on things, right? So a lot of my friends in the corporate world are saying, yeah, like stuff that, like, the carpet is supposed to be replaced, didn't get replaced. The parking lot, they were going to repave and they didn't repave it, right? Um, and just other things that, those are things that are further away, but pretty soon it's going to be more and more people are going to be laid off, right? Because these companies are going to. So if you are our good friends here at Superstar Incorporated, um, here's the thing. So if you're at Superstar Incorporated, if there's a case, well, if you go back and you look at like Sunbeam, and Dunlop was the CEO of Sunbeam, God, in the 90s, came into Sunbeam and, just like started to slash thousands and thousands of workers to drive down cost, drive up stock. The company has to maintain a certain cash flow and reserves to pay this dividend. And for companies, they know if they start messing with their dividends, people will sell out of the company, because there are people that only buy dividend stocks, right? So if you've been loyal for 20 years and you've been paying this, dividend out, you're like a dividend aristocrat or a king or whatever, and suddenly you're saying we can't do that, like your stock will go down. So Superstar Inc. is going to have to make some choices here. Like, do we not calibrate our superstar machine as much? Meeting, what can we do? Okay, every other light bulb we're not going to have on. We're going to turn the temperature down. How about like people working? Can we trim our workforce, right? What benefits can we cut back? Not can we, like, do we have to try to preserve this and to try to preserve this? Because, once this starts to go, then as the company value goes down, they have less money to invest in purchasing materials and research and development. All of the things that Superstar Incorporated needs to do, they're not worth as much, right? They have value from their shareholders. So this becomes very vicious. Um, and companies can just vanish too. Like, I have owned companies that just that was it. They just went under, then they would change their stock symbol, and then they would trade under, like, a penny stock. You find them, oh, like, you're not not Superstar Inc. just changed its symbol, now I found it and chase it over there until it goes into oblivion. But yeah, this this is very, I think, scary stuff. And let's also say they've been around for 50 years. So people have had their careers there, right? There's other people who buy from them, other companies that source and partner with them. So it gets very scary when you see these types of things happen. So I think, if I'm going to predict, right, I would predict that there would be massive layoffs coming, like probably like we've never seen across, maybe every industry, right? Um, because they're going to try to keep their share price, as, I guess, stable as they can. And there's also all these like mutual funds buying in and pensions. So, like, they're going to try to preserve this, and that might mean that they cut 20% of their staff. Yeah, you look back at Sunbeam, you look back at like Scott Tissue and some of those. Um, like at one time, Sunbeam was, like super powerful, right? And Scott Tissue, and some of this is cyclical, but the thing is, like, it's virtually, every area now, right? Whether it's technology and banks and medical and, even energy, which is usually pretty good in a downturn because it's regulated. And there's a high barrier to energy, right? Like, you just can't come in and build a power line in a power plant and stuff like that. um, like, um, all of this stuff is suffering, because what if people aren't going to pay their energy bills, or what if they're not going to pay their phone bills, right, or their utilities, and they say, I don't have any money, right? They're not going to do that, or they're not going to pay their hospital bills. What if people aren't going to hospitals because they don't have the money for their deductibles, because the inflation is eating away? So they're like, I've got to wait for this screening. So now the hospitals don't have as much business, I guess, but people coming in. So the hospitals have to figure out, what do we do? Like, do we, have layoffs, which they might do. Um, so this whole thing is just dependent upon itself, right? But Superstar Inc., right, is going to try to keep its share price, um, as high as it can. And now, as things kind of go down and there's less money, less people working, less money coming into funds. That's the biggest mover of stocks. It's not individuals, but big funds and stuff. Um, they've got to get brutal in how they're going to do that if they're going to survive. Um, I mean, there are, again, I'm not going to mention companies because I don't want to start turning this into advice, but I mean, there were companies, right now, that just this year I wouldn't have thought they would have taken this kind of dive. Like, they would have weathered this a little bit stronger than their counterparts, but this is such a strong sucking motion of based upon these trillions in inflation and these billions of dollars going and being spent into other countries, right? Other to support war, student loan forgiveness, right? Another trillion or more, gets tossed into this, right? So, which is basically just pushing this into, um, people. having it amortized across all of us to pay for that debt. It's really crazy. So now let's just change the math on this before I put away this piece of cardboard. Let's say that this is the good times right now. The 30% is the good times. Let's say that we've got another 20% down from here. So instead of 7,000, right? You've got $5,000 now. So imagine like this is a pension fund or something. It's like 100 million or whatever, and suddenly it's 50 million, right? But let's say this goes down another 20 because we're saying like now's the bottom, and I would say it doesn't feel like that's what's happening right now with the Fed coming out and raising and saying we're going to raise more and and all of this. There's no cut in spending, right? That's the thing. There's absolutely zero cut in federal spending. So you have the spending plus. So what's going to slow things down, right? So if this goes down to $5,000, it goes down another 20%. So at the end of the year, you're $10,000 of whatever you have in your account. There, you have 5,000. So you have half. So you're like, ouch. So you tell somebody that you're down to 5,000. How much? What kind of gain do you have to get back to 10,000? Oh, I got to go up like 50. I'm down 50%. I have to go up 50%. Well, no, right? Because let's do a different color. This is where we're at right now, right? So this is where you got to start thinking. So let's say this actually becomes $5,000 because this goes down another 20%. This so from where we're at, we go down another 20%. Um, so really, at the end of the year, you end up with $5,000. $5,000 times. So this is someone saying, "Oh, we're down. I'm down 50%. So if I go up 50%, I'll be fine." Well, if it goes up 50%, which would be pretty incredible from a historical perspective on the stock market, right? But you'd have $7,500. You'd still have be 2,500 short. You'd only have 75% of what you started with if you go up 50%, if this drops to 5,000. So somebody do the math, maybe Bolo. How much, if you had $5,000 down here, how much of a gain would you need to get back to your original 10,000? So if you had $5,000, what do you have to multiply to get back to 10,000? Because if we multiply by zero point 0.5, right, we are there. What is the math? So yeah, it's 1.0. It's 100% 1.0. So let's put the marker away here. This is where things get really terrifying, right? Um, if your account, right, if your account is currently down 30%, which a lot of people, that's their reality right now over January. Now, this doesn't, you can say, oh, like in the past, we had gains and it went up and down. And yes, it did, right? But we're saying just in this scenario, right, you're down. If things continue to go down, and again, the Fed said they're going to continue to raise interest rates, um, all of this federal spending is at a record pace. That's not slowing down. All these dollars coming in. So let's say it does drop another 20%. Now you got 5,000 on December 31st of this year. And somebody says, "Oh, I'm down 50%, but I guess if it goes up 50%, I'll be back to even." I don't think so. If it goes up 50%, you'll have 7,500. If it goes up 100%, you'd be back to 10,000. How long would it take of consecutive years for the market to return 100% for you, for anybody, right? I mean, that could be a decade. I mean, who knows? So this is pretty scary to look at this, have this discussion, right? Because even just a typical portfolio of people, well, they'll tell you a typical portfolio might be 7-8% over time would be a return or something. But there was a stretch, I think, from like 68 to 82 where the market was basically like flat. It didn't really do much. So like, right, if you take a big sample of things, but you also have fewer dollars to put in to any investments now. Like if you're working, if someone had, 3% of their salary that they were putting into a 401k, they're probably telling their boss, don't do that because I need that 3% now for my living expenses. My rent just went up, right? My other stuff. Okay, yeah, I know I get matching, but I need the money right now. Or they're pulling their money out of their 401k while it's down. So, um, they're paying a penalty in for early, or, there's some conditions where you can take money out and stuff like that you can look up, but they're taking money out that's down. So, um, they're already taking that hit, right? Because they're saying, I need that money now because of inflation to pay the bills. So the inflation part is like, I've never seen that. We've had markets go up and down, the 2001.com, and after 9/11, they froze the markets. I remember that for 3, 4 days, they didn't open. But you didn't have inflation, anything like now. It was pretty typical, right? I mean, you go and um, things were things barely changed on in stores, and actually a lot of things got cheaper. Like things um, got again, I remember buying a flat screen TV, in like 2008 that might have been $1,000, and then the one that replaced it in 4 or 5 years later was maybe $200. So there were a lot of things that kind of also got cheaper because technology was making it cheaper, and these um, the supply chain was bringing in cheaper goods and stuff like that. So um, buying in bulk, the big stores that came in and were using bulk purchasing. But this is really crazy stuff. And if you're young, so I'm saying, if you're like in your 20s right now, this might not have a real big impact on you because you're buying in, it would, where it's going to have an impact on you, right? Is you're buying a house, and today it could be 6, 7% interest, especially if you're younger, your credit's probably not going to be real high because you don't have a lot of work and history and stuff coming into that. But, and by the way, like when I bought this house, I think it was 5% as the interest rate on it. So I mean, interest rates back, that was 20 years ago, but interest rates like in the 80s were like 15%, stuff like that. So this whole thing of like, oh, like a home interest loan of like 2 or 3%, like that's that's been the last 10 years, and that's pretty artificial. That's not the way over the last 50 years that interest rates have been for homes. So you have these really low mortgage rates. But now, if somebody's coming and they want to buy a house, right? I mean, they're probably paying 6, 7, 8% on their house on mortgage, right? On interest, where 2 years ago, maybe they're paying half that, right? Or on a car or on things like that. So, um, but this can get really scary. You drop down even more. How long does it take to come back? And yes, you can cost average in, but what if you start to need that money? Like, what if your retirement age, or what if you are currently retired and you have your $5,000, or let's say you retire with $1 million, right? Um, and now you've got $500,000 left at the end of the year, right? And you're like, holy smokes! Like, this money was supposed to last me 30 years, right? It's amortize it out. It's supposed to take $30,000 a year plus Social Security, and now I have to take like $15,000 a year, and just hoping like this kind of stays. um, that's pretty terrifying, right? I mean, it's it's very terrifying. So let me go over to the questions, and I'll just, if anybody wants to still shot, I'll just put this up there. Again, it's just for educational purposes, and again, this whole thing of, you're going to probably hear a lot about dividend stocks, you know, and this is largely how that scenario works on these. But the thing is going to be, always know that's this dividend thing is also not a guarantee, right? Like Disney again was one company that had paid dividend for years, and then came out, I think 2 years ago, right? And they said we can't do this anymore because we need those dollars to keep operating. Um, so, that's Superstar might come out and say, we've got to do this, we've got to cut back or freeze it and something like that. So once you start seeing those things, I think it's going to be indicators of more slowing and layoffs and stuff like that. Um, you know, if you had some proposal to cut government spending, right, and government not spending, putting all of this money into wars and stuff. But let's go over to the chat. Let's go for me to buy a whiteboard. I asked my youngest daughter if I asked if she had her whiteboard because, and she said yes. I didn't know if she got rid of it or she still uses it, but she said I have stuff written on it, so I couldn't use it. And then I don't really have a need for a whiteboard as much because at the university I can just write on the whiteboard there and stuff. But I'm taking the cardboard from Super Pilotish idea, but I think this is good because I don't know how to do the overlays and stuff, and also if it's a good screenshot, right? Like what we just talked about tonight, this is important stuff to know because the market is when when I say the market, investments and retirement, just things in general, and how these companies are doing. They are most of them are substantially impact, like FedEx, right? FedEx, their CEOs say we've never had a day. We've been down 21%, and so you see this like massive swings and punishing of stocks, and I think some of that gets driven by the computer algorithms and um, but that's another thing, like this whole thing where stocks go down 1,000 points and up 1,000 points. Like I don't remember that ever. Um, like on that in a month, that would just be normal, right? Oh, like, Monday it was up 1,000, like hypothetically you're thinking, and then like, oh, it was down 900 the next day. And then, but as a percentage, right? Like these 3% swings, like those types of percentage swings were very, very uncommon. Um, until just recently. Like the frequency of those, like they happen, but if it happened, like if something went down a lot or it went up, then it probably had got that out of the system and would kind of move along for a while. It wasn't like you were having a lot of it. So if you think like, you know, you you had Lehman in the last, basically, right, like 10 years, the housing crash and then the pandemic and now the inflation crash. Like that's three major hits in a decade, and that's not typical to be able to like rebound, right, and come back from that. Plus now inflation, if you didn't have inflation in this mix, you know um, people aren't having to go here and say, you know what, like my savings and stuff, like I've got to tap into that because again, my rent just went up by 30%, my property taxes just went up by 20%, and my just everything that I have, my insurance, my health insurance and premium. I mean, whatever it is. I mean, they're like, I need this. I for gas in the car, for whatever. I've got to suck this money out of there, which then really puts you in a fragile place for retirement. But I mean, what other options do a lot of people have when inflation comes in? Like I know a few people in personally, right, who are in the chat, and one of them was telling me that their family, they rent they rented a duplex, and their family was notified. He was notified, that the next month their rent is changing and going up 30%. So he's like, what, who budgets for that, right? Like, so they are, they're having to scramble and things that they can sell, right? If they have some things that they can put on eBay, on Craigslist, on Facebook Marketplace, expect canceling, right? We're canceling our Spectrum, we're canceling, all membership type stuff. And then it's like, if we have this, could we pull out of that to make it work? Is there something extra to pick up for a job? I mean, there isn't any, government stimulus check that's coming out, right? So I mean, it's putting people in a spot of saying, what am I going to do? And then you're looking at this stuff and saying, oh God, like now inflation, right? I have to pay, uh, you know, 30% more for housing, and I am having to do that by taking some money out of my right out of my 401k or whatever savings. Well, if you just have it like in a savings account, then it's not kind of affected. But then also like inflation's been killing you, right? Because it's not you're not getting anything on it. But let's say it is like you have to tap this 401k, which again, John, so was really sold hard to you, right, by your employer. And I think it's required, like by law, when most places, when you start, that they just automatically enroll you. And then I think there's this thing too, you'd have to look that every year your participation rate increases a little bit. And that's to get people in a 401k, right? So suddenly, you go in and you're like, "Oh my god, now I got to take this money just to survive, and I'm taking out of the 7,000, so I'm dropping it. I'm taking 2,000, I'm dropping it to 5, so it's just like it went down in the market because I've taken this money to live on." So this whole thing kind of just destroys your 401k is because of inflation. I mean, so you're a victim of scenarios, right? Like you did the right thing. Like you did the right thing of thinking of your future, maybe doing some company match, and being responsible, right? And you have whether it's a house now, you're getting eaten up by property taxes, or it's rental or whatever it is, and you're like, I'm right. I am trying to. How's this not working? How am I failing as a person? How am I failing in my finances? And again, I'll tell you, like 50 years, I've never seen anything like this. Um, I've never seen this. And again, it goes back to a year ago. I think I had four quotes from Janet Yellen, and she said, "I don't think inflation will ever get above 2%." That was one of them. Um, and there were numerous messages coming out of the Federal Reserve that things, the soft landing, right? It's nothing to really be too concerned about. Well, this, as of where we're at right now, as of this specific moment in time, this is very concerning. And let me look at the 2 year. Um, so it's still where it was when we started the show. So this is really crazy stuff, right? Um, People not putting money, saving, people are saving less than they're taking out of banks, and yet banks aren't like. I remember taking out a CD at a bank in the 80s, right? And the banks were so competitive because they knew they could, loan that money out to someone to buy a house at like 12%, 15%. So they might give you a CD for 10%, right? You put your money in for 3 years, we'll give you 10% a year. So if you have $1,000, we'll give you $100 for each year. So at the end, you'll get 1,300 back. They not only did that, they would have things you could take. So, you could honestly like get a toaster. But I opened up a CD at a bank, and this was back, and I'm working this back in my high school days and stuff, and putting a lot of time. And I took out a CD, and they had different things you could pick. And if you take it out, it was just a gift. And it was a Phillips, it was a Stanley screwdriver set, and I still have it to this day. It was, like if you were to buy it, it wasn't cheap. I mean, but right, they're like, we're trying. So it was all these. It was like a display case from The Price is Right. So you'd go there, and I remember like, oh God, like this is. I didn't have a set of screw. You had this, collage of screwdrivers that you acquired, as a young person, right? But an actual, Stanley screwdriver set. But yeah, that I still have to this day, just because that's the way things that they had to incentivize to get people to put money in. So I'm like, I would expect that now. Like I would expect that there would be some incentive programs that would be out there. And granted, like no one's going to care really about a screwdriver or something like that, but maybe a bank saying, hey, like, if you take out a CD for 3 years with us, we'll give you $50 Amazon card or whatever it is. Again, which still is, but like the fact that we're not seeing that these kind of novelties. These banks really aren't competing because people aren't coming in obviously for the loans, right? Because if you're giving money, more money is coming out, and you need money to make loans. The deduction is you're not making as many loans, um, which is meaning the economy is slowing down, right? People aren't buying as many things that they would be taking loans out for, probably bigger purchases like cars and houses and things like that. So yeah, this is just pretty crazy stuff. This is the fear, right? If you take this hit, I don't know if you come back from it. If you're older than 40, I don't know if you really rebound from it, right? Because you're spending so many years. I mean, you can be putting money hypothetically away that, but you could also be buying, say, so like you're putting money in here and stuff, but at the same time, maybe if you had that money and you're using it to pay down other debt or putting a new roof on, you're increasing the property value of your house or stuff like that, or if you're eating better food, right? If you're taking care of your own health. um, so there's all of these kind of trade-offs in here, but it's you take a hit like this, and you know you're 40 years old or older. It's just the math, right? I mean, it's going to be really difficult. I mean, these are people who probably tonight are looking at their retirement accounts and saying, if this drops again, and if we end up in this, like, my plan of retiring at 62 is gone. Like, there just won't be a retirement. I'll just have to let some, right? Social Security isn't a lot for a lot of people, especially during times of inflation. I mean, people on a fixed income, when gas was predictable and they're probably not doing a lot of driving, they're retiring, but their housing was predictable and their food costs and their medical, that there would be some increase in that, but not 30% a year. So this is terrifying. And I think there's some empathy, right, for all of us, with each other, and then with people that we know, um, especially um, older people. I think, younger people who are like, I play by the rules, right? I worked hard, I'm out here making some money on my job. I've been renting, but yet, like, every time I look at a house, it now the price is up another 10% on the housing market. And then, um, now if I were to buy a house, I'd have this mortgage, and it gets prohibitive, and it can probably be depressing, for a lot of younger people. I mean, probably people in general, but I mean, um, so you've got that going on, right? And if you're an older person, you're like, what am I going to do to get by? Like, what are some things that I'm going to downsize or sell? And so this is around the world, right? So I have friends in Germany and many other countries, and we've been talking, and this just isn't a US thing, right? this is this is replicating in some places to much stronger degrees than in the US, because the dollar is strong, um, relative to other currencies right now. But like, um, so again, that's the thing. Like, I don't know. And I have certain ways that I try to manage things to mitigate an impact like this. But it's really freaky because, again, a lot of this is brought on by carelessness of the government, right? Flat out carelessness of government spending, and no one is being a good steward of the dollars. And this is where I was talking in a different show, and I said, there's not a big difference conceptually about saying, we have a $30 trillion debt or a $50 trillion debt. Like, a trillion is, people are like, well, you know, obviously 50 trillion is more, but they can't think about 30 trillion. I mean, what does 30 trillion buy you? Like, what would actually, you know, how many of these $1 million bills, right, could you stack in? This is fake. Don't come to my house. This is a prop. Um, how many $1 million bills could you stack to get a 50 trillion? Does it go to the moon? I mean, it's all abstract. And when it becomes abstract, then this stuff just becomes, I don't know if it's normalized, but it doesn't have the shock value, right? It didn't lead off the news tonight, right? If your company that you work for, a lot of, if you're working with the 401k stuff, you probably didn't get an email from your company saying, "Oh, we're aware of what's going on, and we just want to reinforce." I mean, maybe it did, and there's at this point, I mean, but like this is pretty quiet, and I'm thinking like this should be people should be screaming this, right? Of like this is you've got to understand the math on this, um, and you know it's whoa, it's so again a little fallacy study you can do is so fallacy is just kind of misthinking, but um, if you just ask somebody and say, hey, if you had $10,000, right, and it went an investment and it went down 30%, right, so now you have 7,000, how much would it have to go up to have 10,000 again? Almost everybody is going to say 30%. Almost everybody will say that. And you might even have some advisors, right, that say that they point out on a chart, well, here was down, but then here was up and things like that. Well, it depends like when you come in the game too, but like if you come in and or even the last few years, right? If you've retired, like this really looks different for you, because you've been siphoning money out for your own survival. But this is rough. So now, you can say, well, what if I just preserve this, right? I have this, I have this in a mattress, or I have this in whatever account. So, well, yeah, and then you'd be preserving it, right? But there also really isn't any instrument out there that is um, matching inflation, right? Back in the '80s, remember I took out that screwdriver. I got the screwdriver set. Like you get 8% on a CD, and inflation might be early '80s like 10% or something. So it wasn't like that far off. Like, but now, like if you keep your money in a bank, the best like in my area you get is like 3.6%, but inflation is maybe 20%. It probably could be higher than that right now. I mean, we know that in I bond, the inflation rate on I bond is 9.62. That's what the government has revealed. So if you were to buy an I bond on Treasury Direct today, you get 9.62% for the next 6 months. They reset the rate in October. But that is like, that's as of today, right? It's 9.62. That's what is admitted. Now, realistically, it's probably much higher than that, right? So, um, this, so if you have 10,000, yeah, maybe some people you're preserving this, right? But at the same time, the cost of everything is going up, your insurance and that. So, wherever you invest this, that's kind of the thing that really hurt elderly people in the last 10 years because savings rates were really, it hurts them today too. Like if you had some savings and you could get 5% interest on it, let's say you're retired and you have $100,000 of your own savings and you've got 5% a year, you get $5,000 from the bank for lending that money to the bank. Well, $5,000 if you're retired, right? That might pay your property taxes. And so that takes care of your property taxes every year. And maybe you have some social security, a little bit of a pension, and you're living meager, but you're getting by. But the last few years, like interest rates were maybe 1%. So these people who were savers, especially elderly, they weren't getting anything out of that. And that's where there should be some, I think, a federal law that says if you're older than 55 or whatever, you can hold $100,000 in a government bond. Let's say a special bond like the seniors retirement stability fund bond. After like hurricanes, they have like Hurricane Andrew bond stuff like that. But and it pays 5% um, on it, and it would be something where it would like pay it out to you as a dividend like every year. But you can only have 100,000. If you have more than that, or they won't let you take out more than that. You cannot have like that much in it, but it's guaranteed right by the federal government. Like that would be fair. Like that would make a lot of sense. Like an I bond. So an I bond right now is 9.62%. That's inflation adjusted. But for a lot of the last 10 years, that was like maybe 1% or less. And then that'll go down as inflation goes down, or as it's reported to go down. But you can take 10,000 a year out in an I bond. So again, if you're elderly, you're retired, You could take 10,000 of an I bond and get $962 a year in interest. You couldn't take out 50,000 or 100. The government capped it at 10. So this is another part where the government really should have something in place for either seniors or families or whatever, where there would be some kind of fixed bond of 5%, let's say, up to a certain amount, right? So it couldn't be, you couldn't game the system of someone from another country or some company using your you to be the one that's purchasing the bond. And but that would be fair. Like that would be fair, and it would help out a lot of people. But nothing like that exists. Nothing like that's proposed. So um, let me go to the chat because look at my card here. My So I gotta go back here. I'm not gonna go way back because you guys probably all aren't in here yet. But um, Against the Masses um, is here. So just giving a shout out to Cal Worthington commercials were legendary back in the day. So um, yeah. So Vanessa saying a dual board with white board on one side and black on the other at Lowe's. Oh, sorry. I buy mine, make a frame, and ta-da. Yeah, I'd like to think I could get better at doing stuff on screen. So you're right. You're right, Vanessa. I do need a whiteboard for this type of for these types of shows, or like when I talk about the school stuff, and I was like, here's Fun 27, which is special ed, but here's like categorical aid. So like just to have that and bring it back is um, so yeah. Or I convinced my daughter to erase the drawing of a cat she made on hers or whatever. Um, so let me get. I don't need this light. There we go. It's kind of bright. Um, so yeah, so these are some kind of core things. I hope I'm not done yet, but I hope this has been helpful, and I'll try to answer questions. Corey, a box of crayons, just in case you need to mansplain. Bacon. All right. Vanessa saying some rents went beyond 50% increases in my region. Yeah, absolutely. Um, so how do you accommodate that? And salaries went up, right? But people weren't getting a 50% increase necessarily in a salary. So where do you make this up? And if you have savings, that's where it's going to go. And then it's also going to be people selling things. So right now, look at Craigslist. Look at Facebook Marketplace. You will see a lot of stuff that you saw if you're looking. And I was looking, documenting this stuff after in March of 2020, before the government came out and said we're going to do unemployment stimulus for people. You get your $600 a week and the stimulus checks. Before that, so Juan, I was going to say Juan Brown. What am I? Our friend Juan Bacon, Juan. Why can't I come up with Juan's last name? Put it in there if you can help me out. But Juan from the Tenderloin, mechanic friend, was in March of 2020 buying a $10,000 used vehicle for $500, right? Because people needed the money, and they would tell him, um, "I need the money, right? I have to make rent. I have to do whatever." And he said, like the tires were $500 alone. And then he would fix the vehicle up. And then as the market started to turn around, he was flipping these things. But he said, it was crazy. Like people were just like, what do you give me for it? Juan Cabrera. Yeah, thanks. I'm sorry. I got stuck on Juan Brown because Juan was in philosophy of information and I've been listening to it quite a bit. Yeah, Juan Cabrera. So Juan, and I interviewed Juan about this, and we're talking about it. And around here, a ton of, I mean, we've had like garage sale season has been non-ending around here. Like it's the perpetual garage sale in half of the city right now. And firewood stuff, buying firewood for sale. People are selling just things like crazy. And just spending a little time on Craigslist, like people are trying to dump things that are they'll say like meet me at the storage unit I have and make me an offer. Like that's coming up. um, in my area. Like there, people are just saying, "Here, let's meet." And you know, if you want to pick some things out, I'm not sure what's all in there, or you want to just say, "I'll give you, you know, $300 and you can have what's in here," after you kind of like poke around a little bit. I mean, this stuff is happening because people do not have money, and the money that they do have is suddenly there's such a demand for it from, right, insurance, from in food, from the rent, just everything. So um, I have a Chromebook in front of me. That's Man Against the Masses. So yeah, Bolo, collect birch bark. It's magic. Corey, I can see a box from where I'm sitting. This got onto crayons. It's some Bolo. I'm not a financial advisor. Yeah. So John Steele, renting my building is 3,750 a month for a two-bedroom, right? And John, is there also like a HOA fee that you're paying, with that? So yeah, I mean, so you have the value, right, of if you were to sell that, but you are still coming up with that. And let's say that, if you're retired now, I mean, you'd have to be generating that much a month in retirement income just to stay there from your 401k or 401k pension or whatever. And I mean, like, or you're amortizing out, you're spending down part of your savings to your 401k to do that. You're going to burn through it. But I mean, that's you'd have to have a really substantial amount. And if it goes down and you're paying that, you'd be like, could I keep doing this? I got my printer and running. Oh, CT's making stuff. Good. This is why I do all things, wrong things now. I got tired of being punished for doing the right things. So yeah, and Bacon, I think there are a lot of people right now who just feel like down, right? Like like I'm a good person, right? I'm being punished for the war in Ukraine, right? The government hyperbole of saying, we all got to chip in for this. And that's why gas prices are going up and other things are going up, and but this whole thing of like we don't hear anything really about what are we going to do to improve the supply chain and to get things from point A to point B, right? And that's we don't hear that type of stuff. So I think people, it's gone from being kind of this rhetoric to actually like, oh, like my wallet's thinner right now, or um, I'm having to change, some things, right, that I'm doing. I'm going to put off, replacing, the tires on my car for a while, or I'm going to postpone, buying new socks or whatever, or going with a different, cheaper bulk brand. I'm not going to eat food that's quite as healthy because it's more expensive, right? I can get some of this other stuff. By the way, I was at Goodwill today. We have a beautiful modern Goodwill building in our town. And I swing through there every now and then, and I check out the sport coat section, sport coats and blazers. And I picked up a 44 rag, light blue kind of gray summer 100% wool sport coat. So it's thin, which I like because I'm typically like a warm blooded, hot, and so sport coats, if they're a little bit um, heavy. I don't like that because I kind of heat up in those. But this thing was awesome, fit perfect. 44 rag, took it off the shelf or took it off the hanger, look in the mirror. I'm like, wow, this is just, look it over. And because like, who really wears that stuff anymore? It's probably an estate that the stuff comes in, somebody passed on and the stuff gets donated. So I'm like, I'm going to wear that to my next university class. And I know the shirt I'm going to put with it, but $7 for that sport coat. Um, and it had been dry cleaned too. So I don't have to mess with that. I don't have to Febreze it like crazy, like my other ones. But um, so yeah, Vanessa's saying food inflation by the last government last month was 17.6. Right. And that's again, that if that's the number, that we're being told, right, it's probably much higher than that, right? So um yeah, this ban talk, the inversion on the 2-year and the 10-year treasury is screaming we're screwed. Yeah. So what ban talk is saying is the 2-year note, and you also see this in banks on certificates of deposits. If you Banks will usually go at 5 years if you take out a certificate of deposit where they're giving you interest on it. You're loaning them your money. The 2-year rate right now is like 4.1%, and the 10-year for the treasury is what, like 3% or 3.5. The the th- what should happen, right, is your the longer you give the government your money or the bank your money, they should be giving you a higher rate because you're without your money. You're tying it up. They can loan it out, right? So you would think a 30 year should be the highest, 20-year would be a little bit lower, 10-year would be a little bit lower. And then, like these short term notes, like a 2-year note or a 1 year, that those would be the lowest. But actually, like, a 2 and a 3-year treasury now, sorry, are about 4%. So, just to give perspective, like a year ago, like that was paying, like point one, like a 2-year note, right? So, you give $100 note and a year later, you get $101 back. Or no, not 101, you get $100.10 back. And like today, you get $100.04 back. So that's the difference. So a year ago, on a 2-year treasury, if you had $100 worth of treasury you bought, you get that 0.001, you'd get $100 and a dime back in a year. That's so no one was really putting money into those things, right? But now you'd get 140. So you can see the difference. It's hundreds, if not thousands of times that has gone up. And then boom, you know, the short so the short always kind of indicates instability, right? If your short-term yields are higher than your long-term yields, because you would think the future is going to get stronger, right? It's going to get more robust. Um, but the banks don't think that, right? Because otherwise they would be giving 5-year notes would be their highest note, and their highest paid notes are typically now 2 or 3 year. Um, and no one is the Fed's not able to pull it off. Like no, the big countries that buy American debt, they're not like, well, we'll commit to you for 30 years. Like we'll be in this marriage with the U.S. for a 30-year commitment. They're like, nope. Or big companies and big funds or pensions, right? Who, you know, um, so the U.S. is so they're not even going there, right? They're like, just make a deal with us. Just hang with us for 2 or 3 years, and we'll make it worth your while. That's kind of what's happening right now. Like, we'll just get us going, and things will kind of turn around, and then this will all like work its way out. And so that's it's a difference between, like, this is we're in it for the long term, like, just fund this when we're going to take a trip, and 3 years will be done and we'll be back. So this long term stuff is pretty much out the window right now. And that's also this part of any you look at these companies, right? We have our good friend, Superstar, and they're like, oh my god, like the all of these longer term interest notes, which are typically always paying the most. If you give your money, 10-year, 20, 30 would pay higher. And they're not like, should we invest in a new building or some more staff? Because, like, until we see this kind of stabilize on a government level, um, you know, home builders and stuff, should we put up a new subdivision? Because it doesn't seem like the government's conveying a lot of faith in the next 10 years. Um, so, this 3 year high in this 4% is just to get money going, right? Just to get money in the hands of the government right now to keep paying bills. It's pretty scary. Um, so let's go over here to Man Against the Masses. I've been tempted to cash out my 401k thinking that even with the penalty, I'll have more money in it. Yeah, not a financial advisor. Um, I've I've listened to many people who've kind of shared that with me that I know. Um, and this the whole thing, like, just say, well, if I right, like, I don't if we just look at what's happened here in the last thanks for the thumbs up, by the way, I appreciate that. And but if we just look at the last 3 years, like, I'm teaching my law classes with my new administrators, and I said, the Des Moines school district is offering a $50,000 bonus for teachers, and and they're not getting people to fill these positions. I mean, some are coming in and they'll be like, sure, I'll take a 1 year, you know, money grab of 50 grand. But people are, especially young people are, they try to say, well, you know, stay in this and a pension and a career. And people are like, listen, like the last 3 years, we've had the pandemic. I was deemed essential or non-essential one morning. Who thought that was going to happen, right? Like my government decided I was essential or non-essential without me having any input or any recourse on that. And then I might have been separated from my employment for not complying with certain government regulations. And then now we have inflation. So, the price of gas went up and my rent went up. And so they're like, I'm not going to play this long game, you know? So that's where Man Against the Masses, you're right. Like, I mean, if you have some things, like one of the things we did is we ordered a vehicle last spring. So what would it like March of 2021? Like, I don't know why it's that hard for me to think about a year ago. What was it? March of 2021, we replaced a vehicle we had had for 15 years, that was like a base model and was needing to be replaced. So we ordered a vehicle, and I was kind of sensing at that time like that we could get a pretty good. I thought the market was going to go up on vehicles, and it has. Like, they've tried to buy it back many times and stuff like that. And I'm looking at that saying, I'm glad I have the vehicle, because the vehicle actually, in the last, we've had it now a year, the vehicle hasn't depreciated at all. It's just kind of a weird thing, right? But it has not lost a dollar in value. We've been offered by the dealer the same price to bring it back, right? Um, so these weird things. But yeah, what do you have? What do you have that's yours? And again, I can't tell you what to buy and what not to buy. I'm not Jeremiah Babe. You know, here, just buy this silver scrap silver letter opener. But I'm more like probably Dan from I Allegedly, without the frequency and the great backdrop. Um, but but yeah, like what has value. And again, this is where I think another part that's not getting talked about is your health has value. Eating good food has value. Going to the farmer's market and, or, apples and bananas and, water versus soda and um, those types of things that, right, are harder to do with as prices go up, right? And then people eat junk, or they're feeding their family junk, and then they get sick, right? And you obviously get sick without that, but taking care of yourself. Oh, I'm not going to pay the gym membership, and because, right, I only have so much money. And I'd be like, I don't know, the gym membership, you going out and working out is helping your helping your sanity and helping your physical body. And what would it cost if your body's maintained versus if it wasn't maintained? What are the costs to that people kind of don't think about, right? um, I'm not going to get these running shoes, right? Because, or, these shoes I go out and, walk 3 times a week because they're good enough. Well, maybe that's a good investment for you right now, because it gets you out because you're moving, and it's good for your health, right? But sure, like it's a cost. But if you don't have good shoes, it's going to take a toll on your joints and stuff like that. um, Corey's saying, I moved into this dump over a decade ago. Rent 712 Canadian, right? Is that what you're saying? 712. You have to stick it in a can. Throw it at somebody. New landlords for the new owners are corporate. Oh God. Sorry. Bacon. C&T. Is that a cat? I don't know. Let's say it is. Vanessa, think one fifth is 20%. You lose one fifth of buying power for food alone. Yeah, yeah. I mean, so these are these are discussions that um, people are experiencing this, right? But they're not talking about this, and as no one on the news is talking about it, um, right? So unless you are realizing this, or maybe you see it in somebody else, they're really starting and point these things out. And again, this is one of those things. I mean, people can put themselves in stressed situations because of their decisions. But a lot of what's happening right now is not because of decisions people have made, it's because of the situation the country is in. And also, I'm kind of with John Steele, like, that whole 401k stuff when that started. If you go back to the history of 401ks, they were just meant to give compensation to like the highest employee. There was, and then it somehow got generalized out like to everybody. And then, you know, pretty soon it became this requirement, like within the last 3, 4 years that when you get a job, you automatically get enrolled. And well, if you take this 401k money and that's not going into the market, right? The market's going to go down and it is this kind of casino thing, right? If you're having to base your whole retirement and there's a timing thing on that, right? Again, what if you just retired in 2018 and you're 60 years old or now you're, 64 and you're like, "Oh my God, I had this much, I'm 30% down plus I'm taking some money every month." Um, John to Vanessa, it is a crime the way they cook the books regarding CPI. Yeah. And the thing, but the CPI, how it was calculated 30 years ago, is not how it's calculated today. Government has always changed those formulas. Inflation's crazy. Um, yeah. So, you know, the, so Heath is saying demand against minutes is even with the penalty, you're still way ahead. So, um, Corey, spent all spring, summer half-assing the work. Now the one bed above and beside are 1,500. What the market will bear. Okay, gotcha. I got a golf umbrella once. Yeah. Um, Vanessa, my retirement pay from United States Air Force began in 1996. The amount it has raised since then is pitiful against inflation through those years. Yeah. So, so Vanessa makes a great point, right? Like, you know, if your inflation is eats away at everything, right? And if you suddenly also have this to deal with now, a pension would still be impacted by this. There'll be a lot of pensions who'll be notifying people this year we're decreasing your payout because a lot of pensions do like a 3-year rolling average, right? So they'll say like, well, this year is down whatever, or unless there's a massive rally at the end of the year. um, so, there'll be people notified they're getting less. And one thing when people retire, they always kind of think they'll just keep going up, right? Even if it's small, like it'll keep going up. Not that suddenly one year you'll get notified, well, over a 3-year average or whatever, your pension is we have to decrease it 8% for the following year. Um, but yeah, it's a good point. These things kind of don't adjust. Um, and that's where I said I really believe there should be this tool for people to put a certain amount of money in, especially when they retire. But I'm sorry about that, Vanessa, because like the country doesn't take care of its of it the long term of its service men and women as I think it should. So and the reps aren't making their commissions. Bolo, right? So if you have your retirement, right, your 401k or B or whatever, or your pension, like people are managing that, right? Someone is coming in and presenting to you and saying you should do this, and you have to ask the question, well, how are you getting paid? Like, um and if the state is managing pensions and stuff like that, you're like, well, here's the pension building, and there's 40 cars out in front of it, like how are they getting paid? Like, they are. So all of these things have um, overhead and maintenance costs also to them. It's just a reality. That's not giving advice. Like, that's just a reality, right? Nothing doesn't run for free. That's the one thing with government treasuries, though, is it's pretty much do it yourself. You just get a treasury direct account, if you're, and it's online, right? It's the older model. And then it just operates. You can set it up just directly like with your bank, and there isn't any fee that they pay you or that you have to pay, and then for transactions. And then when it's done, it matures or you cash it out or whatever, um, it goes back to your account. And then when you do taxes, right, you get a statement and you don't have to pay state taxes. So it's kind of a bonus, right? You're only paying federal taxes, not state. So where I'm at, that's a big thing because we have high state taxes. Um, And there's some other things kind of with some of those, like if you take it out for like a kid's college, there's some benefit to that. And you could look into it, right? But um, Mike said, I have money sitting some in a Roth IRA. So Roth is post-tax money that you put in, and as long as it's in there, it grows and you tax free. And when you take it out, you don't have to pay tax on that Roth. So let's say that Mike has $10,000 in a Roth IRA and he has it in some fixed account, right? Where he's getting 3%. And so, he takes it out down the road. Now that $10,000 is $15,000. That $15,000 on his taxes, that's all tax free because he paid the tax initially on the money he put in there, and all of the interest grows tax free. It's never taxable ever. So that is a cool, and that's just defining a Roth. That's not advice, but so that's an advantage right there that Mike is coming out because you can manage your tax brackets somewhat if you have those tools available to you. So um, man against the masses. Thankful for two small pensions I will be getting. Um, and Corey saying with my pension after rent, I get to live on $10 a day. So wow, and sorry to hear that. Um, Um, Heath is saying I've lost close to 90K in the last 9 months of my 401k. It sucks. Um, so that's the, you know, I'm not sure how much of a percentage that drops you down, but this is the scenario. This is the thing that people are saying, right? Um, and it's a horrible psychological feeling. It's a horrible mathematical situation, and then you have to sit right now. When the pandemic happened, right? The pandemic was a black swan. So the thought was that, like Chad Elkins talked about this on Clary's show. Like when that hit, that was out of the blue. And when it got past, things would return to normal. Like that wasn't everything was, wasn't just falling apart piece by piece over years and whatever. Um, but right now, this is different, right? This feels different. Wasn't just one thing. I mean, although people try to say it was like Ukraine and stuff, but this is different. This is much more of a slow, gritty slide, and then also like it's very difficult, I think, to look at this and say, how does this get better? What makes this situation better as a country? Like how does manufacturing, catch up? How does supply chain rebound? How does government spending kind of come back to something reasonable, right? Where we don't just go from like 30 trillion to 50 to like what turns this around for people? What turns it around where the housing market and where you go to a car dealership and there's actually a car on the lot, like what actually turns this around? What turns around the situation in the Southwest where Hoover Dam and Glen Canyon are down to like realistically like 150 days before they can't generate power? Like I mean, what turns that around? Who solves that? And and again, ABC News tonight, David Muir leads off with a story that isn't any of these, right? I forget what it was, but um, or we're just obsessed, right, with nonstop people of here's coverage of the Queen's passing, right? I guess to acknowledge it, right? But that doesn't need to occupy 5 straight days of TV and media when this is the real life stuff that is hitting people. And so I mean this is just crazy. Like what you know hotels, right, and attractions, things that we go to, parks and all of those, just a municipality being able to operate a park. Are they going to be able to really keep doing this into the next year, like with inflation? uh, like in my community when I was running for office back in spring, I mean, I was starting to have those kind of discussions, but now it's much different. Um, you have to maintain mowers and you have to hire people in parks. I mean, are you going to say, we're going to we're not going to maintain certain parks, right? We're not going to mowing them. We're not going to replace when the water fountain breaks. We're not going to, because, or we can't even get the parts for it. Oh, yeah, this, if we were to put the roof on the little gazebo thing here for the public or whatever, that costs us so much, but like today it would cost us 5 times that. We don't have that in budget. So it's these things that erode um the qualities of our communities and the qualities of our life. And we'll see it too, like in roads not being repaired and things. But government serving us, right? um Worldwide inflation, yeah. So continue living frugal and responsible. This is Joe Morris. You'll fare much better than most. As a personal lifestyle, yes. So, um, yeah, I don't think I'm anywhere in here, right, where someone is going to contact me tomorrow and say, you're giving out financial advice, right? Because not mentioning any securities or anything. We're just talking in generalities of things. But I completely believe um, that there's happiness to be found in being frugal and responsible, right? And there's times you can splurge, right? You put the money in a jar and it gets to be so much, then you go for a weekend at a hotel where there's a pool or something, if you got kids and family stuff like that, or a movie or whatever it is. But yeah, this is, like I said, I bought $7 sport coat today, which I'm proud of. Like, and I would have no problem saying to anybody, I paid $7 for this. Like when I was on PBS, I think that was like a $7 sport coat I bought. Um, and my like my house is modest, right? Just try to keep it up is just the goal. Is to keep it maintained. Um, and my studio, so this is a $20 set of headphones, and like this is, I had the um I I am going to put some money into a microphone, right? Because that's also something I use for my classes that I teach. But my bike is 10, 12 years old. I've had it rebuilt somewhat, but I put 20,000 miles on that bike, so and for fitness and things. And it's, I guess, not for everybody, but I I think, and especially home stuff, right? Like you can as a homeowner for 20 years, you can really get eaten up by just what it costs to have a home, the utilities on a home, and um, the upkeep of having to replace things on a home, and your yard and your concrete, and something goofy happens that you didn't anticipate, with the power or something like that, or some wiring. Um, and you can say it's an asset. Yes, you've got that, but still, I mean, you're paying property taxes, at least where I live, and they're pretty hefty. And so you do have that. I mean, you have some appreciation, but um, it's a big expense. So um, I don't know. I feel happy with with what I have, right? Um, Actually, if you just kind of took this office, right, like that's the paneling that was here 20 years ago. That's the boombox that I bought in college when I was working part time um, at the farm store. I bought that from Best Buy like in 1993. It still works fine. It's back there. And my printer, I bought it in 2008, which I still use. Guitar is 40 years old. That credenza was 20 bucks, and my previous employer was getting rid of that and some other office furniture they were redoing. And so like they just said, anybody who wants to take these things, like so that thing is like, this desk is was out for garbage. This and my dad salvaged this desk. It was at a sheriff's department in Marathon County. So yeah, it is, dinged up a little bit, but this is a sturdy, strong desk that I will never move out of here. Right? I have no desire to go with any. Um, so yeah, Vanessa brings up a point too, like medical costs impact greatly. You're right. You can also have all of these things, and something medically happens, and the way the US is, it can just wipe you out. Or one of your children has a uh, medical condition, right, which requires an expensive medication, and insurance only picks up so much. Or you can have Medicaid, like Katie Beckett, where families can keep some money, but they have to pay the rest into Medicaid. And you can, right, you can be in a situation there where you have these costs, or so you retire, right, and at 62 and at 70 you have a stroke, and now you have your options are like, oh, and it's maybe a higher level assisted living where there's supports provided to me, and maybe that's $6,000 a month. But if I have to go to a nursing home, like that's 8,000 a month, and here's what Medicaid or Medicare will pick up Part A or Part B for how many days, and just like all these things are kind of just happen. It's really hard, I think, to maintain your finances over the long run, or from throughout you to like your kids, maybe to their kids, because something is going to happen, right? That's going to throw everything off. Somebody gets in an accident, somebody has a stroke. Like a friend of mine had a stroke and was on disability. So he was getting disability, right? But I mean, that was barely, he's barely able to get by. He has to pay, with housing. And um, Heath is saying the Great Depression is a walk in the park compared to what is about to happen. Very much could be, right, because during the Great Depression, um, there was a different, well, there was, I think, a whole different level of respect. And I say that because, like, Al Capone in Chicago used to do the soup kitchens during the Great Depression. So here a gangster is doing soup kitchens, and the city's kind of like, well, thanks, right? But people go back to those pictures, right? People are still dressing up, right? They still had a task of like presenting themselves, and they were looking for work. We'll work for, sell a bag of apples, for a nickel or something. Um, and and you didn't have this fighting, right? What happens right now already, like, just think of the rail cars that get looted and things like that, and we aren't anywhere close to like Great Depression type times of I look at this and say, how are you going to shop? Because you go to a store, right? Like, what is store security going to look like in the next year or 2 years? If you leave the store and come to your house, someone will be like, they were just at the store, right? They'll, could follow you home. How is UPS and Amazon and FedEx going to deliver without, cars following them everywhere that they go? I mean, those are real questions. I mean, how are those systems going to continue to work? Because part of it is civility makes it work, right? Kindness to each other, obeying laws, right? Um, make that system work. Band Talk is saying my 401k is down 14% this year. My personal investment account's down 17, and the investments I still hold. So yeah. So you're probably doing better um, than a lot of people. Band Talk. So, but right, still right. If I mean, like, if you retired last year and now and you're taking money out and this happens, it's like, whoa, like, it's one thing to have things go down, but then also to have inflation. So if goes down 17%, but inflation's gone up 27%. Like, that's this scenario we have, this horrible scenario right now. John's still saying PPI in Germany was up 45%. Yeah, I talked to Phil Henry today, our friend in Germany who wants to come back on the show. And it's always different stuff because it'll be like, it's night here. And, it's, for me, it's day, and for him, it's night. And he said, I got to tell you, like, the latest stuff that's going on, of how he told me this afternoon that they, the power station by him, had new lights, and the thing was lit up all the time. Um, so just as of today, right? And he was talking about how people shut down their businesses at 3 in the afternoon, and just all these vacant places, um, and how utilities are crazy. But we're gonna have Phil on, um, who's lived in Germany his whole life. So um, let's see here. Uh, Mike is saying, just like my mom has to draw down her retirement savings annually since she turned 70, or the IRS will penalize her. good point, Mike. I didn't bring that up, right? Require minimal distributions. So again, talk to your financial advisor, look it up on the IRS website. But the other part, right, is um, you, you of a certain age, you're forced to take this money out, but you're taking money out as it's decreasing in your 401k, right? So if you're 75 years old and you have to take X percent of your money out because the feds want that money to be out of there and into the system, right? You can be like, well, I'm taking it out, but it's down right now. I wish I could leave it in there. Maybe I could really tighten my belt and I could keep it in there. And they're like, nope, you got to take it out. So then you're getting hit up, right? And I guess mathematically you could have a loss in your tax return, who knows? But it puts you in a bad situation because now you don't have as much money in there to be working for you. So right, this whole thing, the IRS, in a situation where the market's generally going up and stuff like that, not a big deal. But right now, it's a big deal. There are people who are their hand is forced, and it's like if you don't take it out, like it's a big penalty, right? So you have to take this money out. Um, so remember this, Bolo, when you sell, another stockholder will have a lower price stock. It's dog eat dog. Um, yep. And how much of this stuff is being done that is robotic, or not robotic, is AI, right? Is algorithm based. Like how much of this is being triggered because something gets to a certain point, right? Like the question I would have on the FedEx dropping 21% in a day when they said that things are slowing down. Um, how much of that 21% were traders selling stuff versus like AI algorithms saying, oh, if this holding drops more than 5%, like we're going to sell it to preserve our position, right? Like if that's all programmed kind of in. Um, because I think that the AI, at least like stuff I've read, right, is a big part of, um, well, kind of the robo investing, like I guess is part of it. So, um, pawn shop tomorrow, Corey. Wish me luck. Yeah, and that's the thing too. Like I can kind of see it on Facebook, but on Craigslist and these sites, like you don't have a lot of power necessarily at the pawn shop. I mean, it depends what you're trying to sell, but like people have been doing this. Like they've been coming in. At least the one by me, the clothing, the high end clothing stuff is all it's pretty saturated, right? Um, because people have been trying to move stuff for quite a while. So you guys are talking about some metals and long, okay, which I got. I'm not going to talk about that because I don't want to take this over. I don't know much enough about that, but right, thinking long term versus short term. Um, so John or Joe Morse is saying, I roofed my 100 square foot house for 2,300 in materials and labor from a couple of buddies. So yeah, I mean that's the thing. Like how do you kind of do things? Maybe you learn trades you're watching on a YouTube video, like, oh, here's how to like do this car maintenance that maybe I normally would have had done, or like you're working with your neighbor who like is able to do a little bit of concrete work or knows electric or whatever it is, like this stuff, they're how these systems work, kind of the bartering system. Oh, like we've got cucumbers and squash and tomatoes, and okay, but then you'll send over you know something of venison from hunting or whatever. So um CNT says to me, we're on the edge of financial collapse and civil war right now. The depression would be a dream at this point. It's man, like I said, the things in North Dakota, somebody being run over because they have a different political view. And right, the person who allegedly ran them over, because it hasn't gone to court yet, but did make that statement that um, it had to do with some views, or at least that was a police statement. And I guess that's all I'll say on that. But I mean, those are things you don't expect in a real functioning society, right? Those types of things. And yeah, like this is again, I didn't live through the 30s like my grandparents did, and they talked, and both my grandparents had lived by railroads. Like their property was boom, you get off like a railroad car, and a block later you'd be there. And they said the hobos would come up right from the railroad, I guess, and they would ask for food. And the one they would just kind of pull stuff from the garden, but they were never like threatening, like didn't threaten you and stuff like that. Um, but that's I man, we just do not we don't have that. Um, if people aren't able to keep their phone plans going, on their $1,500 phone, or their you know car with its real shiny expensive rims and stuff like that, it's really weird, or my other $300 sports shoes. um so let me go through. um Mike is saying, sorry about that CNT Designs. It was the Westinghouse plant my dad worked at. He walked to work every day. He did plant maintenance, worked on forklifts. Cool. Heath, remember all those container ships that were backed up off the coast? Well, they have unloaded them, and Home Depot has run out of space to put things. Yeah, I've been watching channels like that, and I've been seeing that kind of at our local um, stores. That you know, one, there's a lot of stuff, and two, it's not matching the season, right? You know, so I did some shopping today, which make my list ahead of time is mostly essentials, but I see like a lot of coolers and summer stuff like grills and stuff like that, which I didn't, that should be gone already. Like, right, I've worked in retail when I was in college and stuff, so this whole system, but so these are things that were bought and paid for. Like I think I heard today, like what Walmart has canceled billions of dollars of orders for their stores in the future. So now that's money that's not coming into companies, because right here, Superstar had products they sold at Walmart, but now they were told, you know, we're getting less from you. Um, so Mike, he was a better man than I for sure. So yeah, and I can kind of say that about my dad too. My dad, it's like his whole life, like he's a better man than I am, and I have no hesitation in saying that. Uh, they don't have people kind of that nature. So, yep, 800 grills for 150, right? And so this will happen. It's kind of this nuanced thing, but like perpetually, like that can't happen. That's not a business model. Um, Mike is saying, it's that time for me to close up shop and head home. It's like, oh, thanks, Mike. Thanks for being here. I didn't plan to do a show today, but again, after kind of the weirdness of the afternoon, and kind of just the announcement, right, of the Fed rate of not being like, um, my impression was that the announcement was kind of like, and get ready because there's more coming down the line. And it's kind of like, okay, but like you're the ones that caused this, so there should be more of it should your tone should be a little bit apologetic. It's like walking into somebody's house with dirt on your shoes, right, and then everything's all muddy, and say, well, I've got to go to the bathroom here in 2 minutes, so that's going to be muddy too. I'm like, well, you're responsible for this, so you got to try to fix it to some extent. Bolo's saying, my grandpa was on the team who designed the popcorn machines found in movie theaters for General Foods. That's awesome. Those made a fortune. He got a salary. Wow. When I worked in speech language in the medical sector. We had a long-term care facility that was part of medical facility I worked at, had a long-term care that was underneath it. Management, right? But there was a man there who had a box, and it had this patent, and he invented the for like peanuts, like light salted peanuts, the bag how it would seal the thermal seal. The guy had a patent for that. He invented that. And that was like his, so he was like showing everybody, and they like showed like the actual like first bag that they had. It was all put together in this little like display case type thing. But I'll always remember like he was super proud of that. Like that was, he was like, he had to work as this whole thing of like using heat and the seal that wasn't happening back in 1935. Um, so so yeah, Mike, thank you very much for being here, buddy. Appreciate it. Um, Corey's saying my mom was in the secretarial pool before she had my brother and I. Dad was a communications engineer for the Canadian Armed Forces before he fell off the radar tower. Um, CNT to Mike, you're a good man, brother. Do what you can to honor your dad, and people say the same about you. That's good advice, CNT. Yeah, I say the same thing to you, Mike. So that's really a good statement there, Coop. Um, Corey, thinking on it, he was probably misdiagnosed, or he was probably diagnosed back then. Old Humble raid. Oh my goodness, look at it's Old Humble in here. So very good. I know you've got opening up, showing the new bar, and you've got smoked things for people on Friday, and just a lot of great stuff happening at the Old Humble Distilling Company. So, shout out to our friends there, and a great Thursday, but very frequent podcast, and some really funny YouTube shorts from Old Humble. Um, so, Easy Street with Dren. Hey, Easy Street, welcome, welcome. By the way, the channel's at 1,221 subs, which is awesome. Thank you. If you haven't subbed, please subscribe. That's again the most we've ever had. When I say we, me. And a year ago, like the show had like 500 subs, right? So it was really slow to grow, and to crest 1,000 was a big thing. And now, to get a little bit more and a little bit more helps the watch hours, and also like if people come on the show, right? I want to eh, if you have like over 1,000 subscribers, it's much different than saying, oh, like I'm going to interview you on my show and I have 15 subscribers. So that person's like, okay, like I'm not sure if this is the best use of my time or something like that. But thank you so much for, yeah, the thumbs up, the comments. I posted a few shorts in the last week, and some of them did really well. Like one had 2.4 thousand views, which like I was like, whoa, like his whole channel has like 45,000 views. Um, so CNT, I am really not as dumb as I look. So I hope you're poking fun at that, because I think you're a smart guy. Um, and Old Humble Distilling Company. Um, da-da-da. Uh, Sorry, Doc, I had to unsub from everybody. Oh, okay. So got it, got it. Joe Morris, Doc is a grower, not a shower. I originally read that as shower, but Doc is a grower, not a shower. I like that. I've never heard that before. Um, I mean, I was out. What was I doing today? Where I was thinking up some of the future shows. Well, I have some guests coming on. Like I've got the head of Wisconsin esports. Mike Dahl's going to be on the show, and that's going to be awesome because like that's taken off. So like, what does that really involve? I've got this personal trainer from Seattle. She's going to be on, and Phil Henry is going to be on. But I was thinking, I don't know. It's crazy. I don't know what I was doing. What did I do today? Where did today go? How am I? I'd have to go back. Might have been out when I was just running my errands, doing shop. Maybe when I was at Goodwill trying on sport coats. I don't know. But I came up with some ideas, and I think I'm going to do a little bit more of what I teach at the university level. Like I have these awesome case studies. I think I'm going to bring in some of these case studies. And so we would have a show, and it would be called Peggy the Comfort Pig. And then, you know, so what happens if someone wants to bring a comfort animal to a workplace, or, to a gathering or to a store? And what's that versus ADA? And then what happens when you try to fly with a peacock next to you? But there's the Limu Emu or whatever, which saves you on insurance, but we're not talking about that. Um, and because that was really good. And like when we were doing kind of the budget thing here, and it's kind of quirky, but that show is actually, the one on how the school budget for the special education stuff, and it's really more complicated than it looks. You guys were like, boom, put it here, but so I found that really valuable. Um, I think it's good stuff. Like people, but anyway, to me, this is from CNT. You can blame the bacon for a lot of us showing up. I appreciate bacon. No, no, yes for a lot of times say here's Doc, and not only here's Doc, but boom, here's the channel link, right? He has been always like very very positive and supportive to me and to make his fan base, that's super pilotish. Graham Wilson, who was on the show 2 weeks ago, Graham Wilson said, I knew you because Bacon was talking about you. And then I saw you in Bacon's chat. And then I found some of the stuff you did. And I reached out, about safety stuff and thought we could do a show. And that was a great show, right? That wouldn't have happened if Bacon wouldn't have been, um, promoting my work. So, yeah, there's a the work here is really organic from all of you, and I'm just trying to do really good tag words, right? And trying to get stuff out so it's searchable when I'm on my blog posts and stuff like that, all of the metadata, so YouTube might recommend it to some people. But um Peggy the Comfort Pig sounds like a furry name. I don't it's a so yeah, it's an actual case study of a child who brought a pig in, and the previous district allowed it, so then the receiving district had to make a determination. But there's certain things you have to go through legally to make that work, whatever your decision is. So we can step through that, which I think would be kind of interesting. um, so, oh my goodness, Heath, lunch is what happens to get to the pig at work. Yikes. Corey, I missed the Aflac duck. Yeah, that was a clever thing, and it seems like it didn't like burn out, like people didn't get sick of it. So yeah, I don't know why that. Maybe the duck got into contract negotiations, and duck is like, one thing ducks are pretty good at is predicting inflation, and I got to have a bigger long-term contract here with like inflation steps in it. And they're like, we're not going there, duck. The emu's working for damn near free. So it's probably what happened is the emu, that whole thing, and then the Affleck's like, come on, man. Or what was that lizard, right? Or whatever, the gecko for Geico. So, um, brought my comfort. This is Goremonger. Brought my comfort copperhead to the store, and a little devil got loose. Yikes! Um, Comfort snakes are a big thing in schools across the country. Um, so I'll bring that up. Like there are there are probably thousands of those across the country where students have a comfort snake that they bring. It's not rare. Flying squirrel is another one. I mean, when I do this show, you're going to be amazed at how prevalent this stuff is. I mean, I was amazed when I was like putting this stuff together, and we address it in class because like you got to have a policy. Like think about this ahead of time. You don't want to the first time to deal with it isn't like when someone comes in and says, "Oh, like my the child's going to bring in a pet snake because the doctor said it helps them with their anxiety." Got to have a plan for that before. Um, Zippy saying the stock market is the second biggest grift of all. I'm guessing the first grift is IP. So um, the older I get, I look at the stock market and I'm just like thinking, this doesn't make sense to me, right? You always have it's like a it's like a tornado that goes from an F1 bigger to an F2 to an F3. It always has to be spinning and sucking more things into it. It always has to be getting bigger, right? And at some point, like it gets hard to like where does the money come from? That's the thing. Like if you just sit down and kind of like, well, where does the money where did all this money go? Like the trillions that have been lost in value, like so where did it go? Like well, it was maybe a lot of it was just written on treasury notes and mortgage notes and was kind of, just there in spirit, right? On a piece of paper or in a digital record somewhere. But it gets to be a thing of, you're like, okay, like the population isn't working. The populations of a lot of countries are going down. Like Japan, China, U.S. Or it's projected, right? The more things are being automated, so like you're going to have fewer people working and paying into. So like you just think of this, and I'm just like, where does the money come into this? Like where does the money go to keep this going? And I don't. That's the thing with me, just abstractly of looking at it. I just had a hard time with that. Um, and then when I see companies like just like contemporary stuff, like last week FedEx getting dropped 21% in a day, and you're like, whoa. Like that seems pretty dangerous to be kind of involved in that kind of machinery, right? And even the CEO's coming out and he's like, the last thing was like 10% under whatever situation. But I mean, that's massive. Like that is um like, holy smokes. um so um Yeah. Hey, is Jordan in here? Or maybe he's not. I thought, or someone made Corey Jordan make YouTube great again. Maybe he is in here. Oh, he is. My God, there he is, Jordan. Is a good guy with a good group of people following. You're all awesome. That is, well, I appreciate that. I do appreciate all of you, honestly. And you guys know that I do. See, there's the ghost thing going in the background again. That's why I'm getting a better mic and a camera. That and for university teaching, but really for you guys. No, the commitment though to this, because I do feel to have I guess empirical, sensible discussions, right? Talks helps all of us. Um, and there's not enough of that going on right now, and we need to be based, right? Because I don't want anybody out there being depressed and feeling that everything's isolated, you can't do anything. I mean, there's good people, there are things, we take care of our own fitness connections with people and stuff. And yeah, so I mean, this show is really meant to provide knowledge and networking, I would say. um, so knowledge and networking, I'll have to remember that. um, George's like, I'm like the docs on it, he's like a machine. Well, there's been a lot to talk about lately. And thank you too, but I'll stick around till the end, Goremonger. So hey Bolo, I'm like, okay, 10-4 says Corey. He's not a bot. I'm not a bot. You're not a bot. So um, this is something Zippy put out there, right? So um, got a link. Oh, commercial. So have a good night, Doc, and all. This is from Heath. Thank you, Heath, very much. I am getting some views on Rumble. This should be interesting. Yeah, CT, I know you went over there. So yeah, thankfully, I don't imagine like my channel would have the type of content which I'd start getting the strikes, right? Um, and because, but I understand the area that you are addressing again, which is an empirical area, and I appreciate your content. Um, puts you where you have to have a redundancy. I mean, maybe I'm naive, right? I just wake up tomorrow, my channel's got 3 strikes, I'm gone because somebody watched it, they didn't like it. Um, but yeah, no, I think you made a smart move there with doing that. Um, the wealth in the stock market is all credit and depth. They're shifting value based on grift and deceit. So Zippy, um, yeah, I I don't, it's just weird to look at something in kind of, when you kind of get to this point too of saying, well, what exactly is a share of what is it? Superstar Incorporated. So, right. They tried to hire Zippy, but he's like, I got stuff going on. I got other businesses I'm working on. But what really is what is a share, right, of Superstar? And, it's kind of this abstract thing. And, you know, what is, and how is Superstar impacted by previous litigation? Because, some of the products they made now there's some issues with. So like that has weight on the company, and I don't know, or future stuff. Maybe they get some. government contracts. The government's going to be spending a lot of money, or maybe, but yeah, it is. It's just eh, it is it's weird, right? At least for me, I'm saying it's just kind of a weird thing. So again, as it says in the show description, it's not advice, and you know, but it you do have to approach it with an abstract sense, right? I don't know what was the movie Margin Call, which I think Margin Call was probably the one movie. Although I didn't like Steve Carell in the role that he played because I thought it was too artificial. Like I thought he overplayed it. Um, but in general, like that probably is pretty accurate, I would say, to what happens in the big power movers of the banking system and all that. I would say it's probably pretty close to like a the movie Margin Call. I'm just guessing, right? Um, so yeah. So Goremonger's saying, "Are you getting close to watch hours?" I am. I am within 400 hours of watch hours. Now it's a little tricky, which is the closest I've been, because there was a time last year when I wasn't doing shows because the book released. Well, book released what in April, and I submitted it in September last year to my publisher. But there was a time I had to restrict what I was doing because basically with if you were a content producer and you said something that was controversial and you're in the midst of a book publishing contract, right? That could damage the contract. That actually did happen with my publishing house with another author. They ended up that there were some things that author took a position on, and then there were people who had rallied and said, "You got to get rid of your contract with them and whatever," but the book never came out. Now, I'm pretty far away from stuff like that, but even with that, I had to largely, with my contract and stuff, stay off of, um, you know, a lot of social media, and especially a lot of stuff that could be a little or more heated, right? And that's not typically where I'm at anyway, but like, when there's just a lot that goes into those types of contracts, right? The publishing house has a whole marketing department. There's all this stuff. So anything happens, there hypothetically could have been damages if I would have done something to interfere with my credibility for before the book came out. Like I'm riding a lawnmower, down the middle of a highway at 100 miles an hour, like throwing marbles at people or something like that. Um, so I guess what I'm trying to say is like every day it resets. It largely has been going up in pretty good chunks. But like if we go back a year and there was like a week I didn't do anything, then that week gets counted in the 52 weeks. It's always this 52 weeks. You have to have 4,000 hours. So I do have some going back to last fall and last end of last year where there were weeks like I didn't have any content, right? So I would only get watch hours if people go in and watch my old stuff. But now it's like new content plus, anyone watching the older stuff. So all of you watching, this helps. And when you replay the shows, that helps. I've got all those interviews. Go back, watch the interview, or listen to the interview with Graham, or watch it, or right, have it on. That helps. Um, so yeah, the show would be monetized. I'm not asking anybody to make super chats, right? But what it would do, it would allow me to have ads, right? So some ad revenue. And I don't know what that would mean for the channel, but it would be nice, right, for the channel to self-sustain the cost of what I pay for, the hosting on Podbean, right, of the MP3 version of the show and my website. Maybe if something like that happened. But hey, so someone is new, Samantha P, right? So do I know you, Samantha? But thank you for being here. And if you're new, please subscribe. Um, um, Very nice. So let's see here. Um, Man, I miss those commercials from the '80s with Light Beer and John Madden. Man, or Fast Actin' Tinactin. But um, shares and stocks feel are. This is Zippy. Shares and stocks. All right, I got to fix something over here. Um, so I want to do a few more blue wrenches, and because you guys have earned it. But the other part, right, is if something goofy is happening in here, which I don't see right now, but just go and take care of it. Um, dun, dun. So yeah, thankfully that's kind of been not a thing lately. Um, but so Zippy shares and stocks feel like an imaginary thing people put value. Yeah, like I said, it does, right? It's I think that that's part of the sales of it, right? Because it's so abstract, and you're like, if you're holding money or you're holding, you know, tradable things or currency, that's different than this thought. And plus, like the time thing of saying, well, if things go up and down, if it goes down, like it'll come back, but maybe, right? But how long does that take, right? Um, and who knows? Nobody knows. Zippy to CNT. I'm always a few in, and I don't drink and smoke. Kings and nobles are static points of control of trade wealth in a system. Dynamic points will be small business, local trade. Yeah. Um, so Samantha's saying people hate on ads so hard. I think you're a great resource, especially for viewers. Thank you, who support a channel more than simple viewership, but are in financial position to do so. So yeah, personally, I hate ads too, even for like my favorite shows. Even like DLD, like, I mean, I'll sit through the ad because I like dark, but I'm like, oh man, I'm so I don't know. I mean, I really don't know outside of if there's a Patreon. Like I know some people that do that. Um, as I would say, I mean, it's really I'm not going out there to like state parks and shooting video for people, so it's not like do this and it'll support me for gas and travel and stuff. But um, would be nice to have the channel kind of be self-sufficient, right? Like that would be nice. Um, so um, to C&T is saying to Samantha, I know your name, and are you another at the Bacon follower? Wow. Anytime ads get brought up, you get a bunch of individuals labeling that person a grifter. So yeah, it's tough, right? I don't I'll tell you one thing, like trying to when I wrote both of my books back there, I'm not going to get that. I never expected the books to generate like a livable income. I mean, the books generate income, right? But you never make a lot off of at least I don't, right? Maybe I shouldn't say it, but if you're doing like an empirical nonfiction work, it's school safety, kind of a niche market, that book sells pretty well because obviously school safety, right? Um, and velocity of information is like pretty robustly represented around the world. Like I logged in Amazon, it got really weird. I logged in, but I was logging in from like the UK. I wasn't in the UK, but it would so I got to see all the reviews people wrote in Britain about the book, which I can't see in the US. It's a different number of reviews and stuff like that. And then like when you go in the US, a lot of the international reviews aren't there. So the book has actually quite a few reviews, but if you log in like Amazon.UK or whatever, like these other countries, like it only shows there. In Canada, most of the reviews um, don't show up on the US. But um, I don't know where I was going with that. The books are personal, professional things that I've done, and then also with my university work, it gives me the ability to do some additional 700 level doctoral classes to teach and things like that. But I don't know. I don't know. I like to be. I like this channel. This, it organically started out 6 years ago. Like the actual podcasts are 187, where I have the blog post, and to keep adding those that archive in. Um, and there are people that find it. Like there are people who will be like, I downloaded every show. Like someone will email and say, I'm a safety professional in Idaho, right? And I found your channel and I downloaded every single episode. I'm like, holy smokes, you're in for a lot of pain there, buddy. Um, but oh, Corey, I will do that. So let me go. Um, done, done. All right, dun, 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 done. I see no ads. That's because I'm not monetized. So the show is getting close. I have everything's in place. I don't have enough watch hours. So if things keep going well, you know, before the end of the year, I'd have enough watch hours, and then there could be ads. And my books are on Audible. Yes. Yep. Well, I should say School of Airs is on Audible and Spotify. It's like in 45 places that sell audiobooks. Velocity of Information will be, but it can't be released until April 12th. It's done. It's already loaded into the system. But by contract, that has to come out 1 year and 1 day after the hard copy release. So it's just so the two aren't competing at the same time. Yeah, School of Airs, I narrate it. That's on Audible. It's 1090. Well, on Audible, I don't know. Audible has its own pricing structure. So, like, even though I say it should be 1099, Audible puts its own thing on it. So, um, my book is 1099. It's 6 hours, and it was it's done in a studio. I narrated it, and so I had professional equipment, and it was all put together right. So it's all leveled and normal audiobook, right? This is like how I present it. If you go to other places, you can get it for 1099, like downpour.com. Um, but so it's if you have an Audible membership, yeah, then you just use your thing. But so that's kind of a weird thing with audiobooks is the price you put is wherever you sell it, they kind of do their own twist on it. And same thing with libraries. Like libraries have to pay more for my books. Um, but yeah, so my book is distributed through Findaway Voices. Uh, so that's they're they're the largest distributor. Amazon, I think Audible has the most volume, but Spotify bought Findaway, and Spotify, all Spotify audiobooks are Findaways. I guess long story short, yes, the book's on Audible. Um, Audible is credit based, yeah. So, but yeah, so therefore, um, the reason I don't know where I was going with that, but yeah, so the audiobook's out there, and then Velocity of Information is awesome. Ben Hawk, the actor, Manifest, you know, Ben narrated the book. It is phenomenal. So I'm excited. Yes, Corey, I'm glad to remove the wrench. No problem there, buddy. Um, so Safety Doc, I read it for the review, but I just got it on Audible. School of Airs, you got on Audible? If you did, well, that's cool. And like I said, narrating that was a challenge because I didn't know the whole technique of narrating an audiobook. And again, it's just me with the sound engineer in a booth, right, at a local studio. You're not before an audience. Not like I'm doing a PBS presentation in 2019, and not a million people are watching, but uh, you're having all these. So there was really no pressure, but it was strange because you do have to mark a script differently, and people taught me who are audiobook experts like Cat Ward, um, Brian Anderson. Some shout out to those folks for really helping me. Of like, here's how to approach this, and it works. Um, but with that said, I mean, my voice was completely right for School of Airs, and it's the only way it could have gotten published. And there's a lot of energy in that. It's really good. Like I listened to it, I'm like, I did a good job with this. But the Velocity of Information, Ben nails it. Again, being a professional actor, having done professional audiobooks and stuff like that, wow. So I'm glad, School of Airs, I did a great job with that. And then Velocity of Information, whoa, thank you, Ben. Um, CNT. Yeah, I just got School of Airs on Audible. Well, that's cool. Even though I read it one, yeah. So you're gonna enjoy it when you get to the chapter of oh man, Kevin Sullivan in Iraq being bombed on the tarmac. I recorded that with, like, so much energy and, like, "Whoa," as he was telling me the story, like, that's how it reads, and you're gonna get a kick out of it because, like, you know me, right? So it's just not listening to this book of David, someone who has a book, right? Um, you're going a lot of, like, what I do now, like, that type of energy is in the book, and there's even, like, um, the stuff where it's like the craziness of these vendors and these state regulations of how nuts this stuff is. Like you can hear it in my voice. I'm kind of like just ramping up, and so it's like a real spirited read. It's not. It's going to be really fun to listen to. And I think my irony and my energy is there. So I don't know. I've listened to it again, and I'm pretty critical of my own stuff. And I've listened when I've been out, biking or on like back to university and stuff on drives, and I'm like, I like this. Like I like listening to the way that I did this, and the again, and the editor, the sound engineer, did a great job putting it together when we had a restart in places, and they went and they leveled everything and do all the magic that they do to take out the plosives that might have snuck through, and um, but it's a good thing. It's a good thing to have out there. Um, Zippy, do normal people or even normal business need the artificial market? If they need funding, there's better, more sustainable ways to do it. So yeah, I don't know. I yeah, it's good. It's a good question. Um so yeah, there are RC Bray. You're right. There are a number of I love anything. So John Ronson narrates his own books, and I think he's an amazing narrator. I love listening to. Well, I mean, they're John Ronson books, but they're by John Ronson. Um, so my book does have a PDF version. I have one for both my books that I put together. I included so yeah, School of Airs, and if they don't give it to you, that's a thing too. So you upload it, but not every site will make it available, and you have no say over that. But if you do get the audio version and they didn't give you the PDF, email me, and in the PDF I include the figures, and then I include all of the citations. Um, so like School of Airs, the PDF is maybe like 10 pages long. And then in Philosophy of Information, it's probably like 30 pages because most of that, there's 471 citations. So you have those citations. And then there's more figures in there. And um, I have the copyright obviously to all of the figures to use them. They're all either pictures I took or they were images that I had commissioned to be made. Um, so yeah, both of them have a really nice PDF companion right off the bat. So you will like that. But again, these little nuances, I would think most places you're going to get School of Airs, you'll have the PDF, and of course, Philosophy of Information. Um, I love doing that too. Like I'm just really glad that those are out there. Like professionally, that was a good thing for me to do. Personally, it was a good thing for me to do. Um, and you know, anyway, it was a good thing. Um, Corey said, "I'm not making loves the sound of his own voice joke right now, even though I really wanna." So I'll tell you why I listen to my own books, because there are things in the books that I get asked. Well, I get asked questions about, right? And because I know I wrote the books, right? And I research, but you get disconnected from things. Like they'll be, people say, "Well, how about the active shooter video game like in Florida, like in whatever?" And I'll be like, "Yeah, I think that was like 2015 because wrote about that." Um and so like I kind of write about things and move on. I don't have all of it like, but so I get refreshed, or those little pieces of things like that come up that I forget about, that went into the book, right? Like, um, and velocity of information. I had seen it and I put it in there how um, during 2021 the Catholic Church, well, people were supposed to take their Christmas tree down and put away their nativity scene, I guess, like 11 days after Christmas, the Epiphanitide, they call it, or whatever. Um, and the Catholic Church came out and said, no, if you don't do that, it's like bad, right? It's a bad omen if you don't have your nativity set put away within 12 days or whatever. So the church came out and made a statement of saying, you can do this as long as you want, just keep it up. And we're all good. Nothing bad going to happen to you. And so that was just one of these crowd in things, is kind of a novelty. I saw the article from the Guardian. I cited it, put it in, but I kind of forgot about it when I was talking about the book, because I'm like, it was just literally like a couple sentences I had somewhere in the book to make a point onto something else. And so when I'm listening, I'm like, oh God, that did happen, right? Like the church actually said it's okay to just keep celebrating Christmas because, feel good, right? Feel positive. If putting away the nativity scene makes you feel sad, then don't do it, right? Because um, this whole crowd in behavior. So I really only I listen for content. That's why I listen, because I get asked so many questions about my work, especially School of Airs. Monday, I'm on with one of the heads of a state on their school safety stuff, who read School of Airs, who's followed my work and stuff. And we're gonna have a call just on going over some stuff. I'm not doing a contract or anything. But I'm like, I gotta know, right? I've gotta have all of this pretty sharp, because I there's just little pieces of things you kind of forget about. So that's yeah, it's kind of funny, right? Now, actually, when I listen to Philosophy of Information, I do marvel at the way that Ben narrates that. The skill of that is really awesome. Um, but yeah, I'm just like, I gotta remember what's going on here. So um, yeah, the PDF thing though of Zippy is like, you got to get the I guess if you had the ebook, right? But you got to get the graphics, right? So like if you buy the audiobook, my PDF includes the pictures and the charts and stuff that are in the books, which aren't many. There's more in Velocity of Information. And then the I include all of the citations because, well, I think it's kind of weird because, right, you don't know in the book when things are being cited, right? It'll just say like chapter 3, and here's what contributed to that. But I think that's a professional respect to do that. It's not legally trying to keep me from being sued with an audiobook, because you don't have to list your citations as a companion document. I just think it's a professional touch to do that. Where someone might say, oh, like, okay, like, I might want to get the ebook version, or version that actually I can, kind of match this up to where the citation appeared. And I don't know. I just think it's a professional way to do things. Um, C&T, the voices in my head sound way better. So, they removed our ad noise as well as our tonsils. I had my ad noise and tonsils removed. Yeah, as a kid, and that actually helped. I was getting sick all the time. Um, Zippy, had some fun trying to get a full size diagram from a 78 truck repair manual. A PDF from the CD is password protected. Holy smokes. Yet I could still make a screen resolution huge and screen cap it. Had to use font reader. Oh my goodness. Wow. I've been thinking about when I presented on PBS. So PBS is pretty territorial on, like, I tried well, I asked, I said, could I take like the thumbnail when I was on the show, which is really cool, like the image I would put on a trading card of myself. Like, I mean, that's just a great image. I'm really stoic. It's just a good background. And I'm like, can I buy the rights to this for my book? Like, that I can say I was on PBS and put this image in there. And they're like, no. And I get it. Like, they've been really good to me and all of that. But I was like, oh, there's nothing we can work out here, because um, you know, like if you go to the historical society, you can buy the rights to like a picture. And I just like, can I buy the rights to? But I did take a number of pictures before the show started that had the room set up, all the seats, right, and then had my presentation up on the big board and the podium. And there's some really fascinating kind of stoic pictures like that I took, that I could have made up into like wall art. And I was kind of thinking opposite of what Coop is making for me. Like, I might want to do. my 2019 PBS presentation, the room just as it was with my display, up and then the empty podium and before people got there. I think it's really a cool image. I took a couple of those, and even like in black and white, it'd be kind of neat. But like that was such a big moment in my career to do that. Um, and then also, I think professionally, it works in the background to have something like that. It's a very appeasing professional photo. Or if you're just talking to people, it's not anything that's going to be distracting. I think it's very complimenting. Um, so I've been thinking about that. Um, I might do that. So CNT, download the movie I sent you and play. Will do. Um, your voice is your voice. Don't hate the sound of it. Yeah, and I don't hate the sound of my voice. Yeah, I um, I like listening to the audiobook, and how good I did as not being a professional. It's not a professional, right? But I'm happy with how that turned out. Um, I'm lucky enough I've never had that problem. So Corey, I've been sick my whole life. Sorry to hear that, buddy. Bolo, I hear you, Corey. CNT Designs, Bolo. I would rather. Jeez, I'm sorry here. Bolo, I would about rather hear a robot voice than listening to my own voice. So, and actually, on audio books, you cannot use an robot voice. It will not be accepted. So that is not an option on Audible or any of the platforms. It has to be human narrated. Um, so um, the electric minx. People say I have a radio voice. Bolo. All right. WKRP in Canada. Bolo. Zippy to me. Well, I can view the repair manual fully, but I need to print a 30-page poster of it. So you don't need glasses to see the diagram. Wow. Remember those old dot matrix printers, and you could print like a happy birthday sign, like an Apple IIe, but how it would kind of do that, you'd print it out like on individual sheets of paper, and you'd have to like rip them apart and then like tape them all together, and you'd end up like using a whole ink cartridge, and paper was expensive back then, and the printers didn't last as long. But I don't know, maybe it's just me, but I remember you thought it was the coolest thing in the world, right? When you were doing it back in 1985. Um, oh, the vid I sent you is a plasma table cutting your logo. Oh my God. Now that is cool. Yeah, I think it's really gonna pop in the back. And I think I mean, the color is gonna be really nice, right? Because the background is just drab. I think that is going to just again people be like, whoa, and then I'm actually to be honest with you, I'm holding off on anything else in the background until that comes in because I want to kind of complement that with everything else that I do. So that's you know that's the my featured prize back there, and then I'll make everything else you know uh, work and complement that. Um, CNT, I don't know. I've listened to some narrators on audio that have zero inflection and sound like a robot. I've listened to some. So one thing I got to do before I picked Ben is I got to listen to a lot of narrators, right? And then I got to pick like who narrate the book. Um, and yes, it's all over there were a lot of very good narrators, but there were some people who you're like, no, it's just there wasn't enough energy in the top. I mean, for this book, nonfiction, maybe they're used to being a fiction, or maybe you could just kind of tell like the handful of people who are really a good fit for that book. But yeah, some people were kind of really. It seemed like the older people that would I guess audition for the part were the ones who were the most kind of just like reading it and kind of more level. Um, and but I'm like, no, this book has to have like a kind of a youthful, punch, and it has a lot of very kind of complicated themes in it, right? So someone has to kind of know how to deliver these. And yeah, that's where Ben checked all of the boxes. Just plus it was pretty obvious, at least from me. I mean, I didn't have other people go through and kind of, yeah, what do you think? What do you think? I mean, um, I was like, it's as soon as I heard Ben and I had heard others, I was like, it's Ben. Um, what's up, Doc? It's old Humble Distilling. Hey, buddy. So this weekend I have four cords of firewood being delivered. So tomorrow in my furnace room, which is on the other side of that wall, that's where I store all of my firewood. So it's a big room, and most of it will be filled up with firewood in the next month. And then I heat my house with firewood until April, right? So um, but the firewood has to come from outside down my basement. I carry it in canvas bags and then I stack it. So it will take me this weekend, the four cords will take me probably 3 days to bring downstairs and stack. Now, granted, when I was younger, I could do that in a nonstop, like 12 to 14-hour marathon. But now, and the thing with firewood, like you have to bring it down and then you dump out like 3 bags at a time, but you have to know what you're doing when you stack it to make sturdy wood piles. It doesn't fall over. And these things are going up almost 8 feet tall. Um, so tomorrow I'm reconfiguring the existing. I have about a cord of wood left from last season, so that has to be first burned. So I have to move that out so it goes in the first burn area. So I'll restack that, and then I'll free up a big section for the four cords to come in. Um, but I have to do like a lot of moving around of stuff, and there's a few. It's going to be a little more work to prep than what I wanted because that room has other things in it, and then also like there's some things I would put away that I haven't put away already this year, like um, my power washer would normally be put away. So if I put the wood in the room, I can't get back to the power washer, but I still need a power washer for a while. So, but anyway, it's not new. I've done this for 20 years. I do not look forward to it at all. I might record it this year and then do one of those things where I do like a 20, or do some clips and, speed it up 10 times so you can like see or take some shots, some pictures, like static pictures as we go through because it's quite a process to watch. Because I forget how many pounds of firewood I bring down. If it's like 20,000 pounds of firewood that I bring down by the time it's all done, it's something like that. It could even be more, um, and that is pretty crazy. So, um, but again, about a month from now, not about 5, 6 weeks from now, we'll start the w- wood burner. Like we'll start heating the house. So, so let's see. Oh, CT saying I've had some college instructors like that. It's really hard to listen monotone. So, like how you hear me now, this is exactly how I teach college in person. Actually, with a lot more hand movements going around the room and just like even I add again, I tell people up front. I'm not doing this. It's not a shtick, right? I'm not trying to. Uh, um, uh, th- I'm. I'm not trying to come out and do a performance. It might seem like that because this isn't typically like I've been in a lot of college classes, right? Um, I've had some professors that do kind of the energy and the inflection and around the room and we're going with stuff. And I've tended to like that. Like those are the professors I remember. And, if they're genuine, right? Like then I would, I really appreciated the energy they brought to the class. Um, and that's how I want to be. Right. So people get used to it, right? It takes a little bit, but then they kind of see it and then they kind of, the subtle, like the humor and stuff like that. So, like I broke a piece of chalk when I was in the one room that has the nice slates, and just by it was accident, I don't know, pounded down on something and then it split in two. And I was like, oh goodness, I only got like one piece of chalk left. And then like eventually, like I did something and split that one, and I'm like, oh, I looked at it and said, oh my goodness, like I did the same thing to your relatives, and then like people are laughing, stuff like that. So I said, well, so, this thing has to come back on the rails because like I'm running out of pieces of chalk and I'm writing small stuff. And but um yeah, old Umble's gonna ask Lisa to bring the book so I can make sure it gets to the library. So yeah, then it'll show up. Like I'll probably be able to see it. I can see a lot of places the book is. I can log in, and they have like the whole library connection like worldwide. It's not where all of the it's not every place a book is, but it's kind of neat to see like the book in Egypt in a library, right? Or in the United Arab Emirates in a library. I mean, so so that's cool. Yeah, and that's going to be a YouTube short, right? When you donate that, like you're going to make a really awesome short. So um, CNT to Old Umble, his books are a great read, brother. Thanks, I appreciate that. I they are great books. I put a lot of time into the. It took a year, it took 2 years to write School of Airs because this is the first time I wrote a book, right? You got to learn. So a lot of stuff you kind of have to learn with that, and then Philosophy of Information took a year. I really had a I would write down an entire I'd have a Google folder and I would write down I'd take a document. Okay, my outline took a couple months to put together, and then the articles and the research, and then I'd be like, here's what I want to write, and here's how it's going to link to like the other stuff in the book. And so it's very methodical. Like sometime I should show how methodical that book was in putting together. It did not win the S.I. Hayakawa Book Prize. So um, it was nominated, which was good. Um, that that's in very good company to be there. But yeah, thanks. I think the thing, right? As I was going back on Monday's show, of, oh, I flunked my dissertation, and the committee walked out on me. Which the more I think about it, I'm like, that was that was not cool, man. That was just not cool to do. But for them to walk out on me or someone, but it was me. Um, the the books, um, they make a difference for people, right? And because they're out there, right? Especially like the column having Monday with a head of an entire state school safety, that's happening because that person read the book, right? And they reached out to me, and they want to share some things that they're doing, and they want to kind of, well, what's some things new that you're seeing? And velocity of information, right? People who read it and they'll be like, this the whole essential non-essential thing, like I've been swirling this around in my mind, and like I'm glad you wrote this because like no one really talked about this, and we just moved on from it, and I'm not ready to move on from it, right? And so I'm like, good. Like, I and there are some books that I have that, you know, really like, oh God, I can't. Lionel Fisher, some of the books that well, he only wrote a few books, but like his books really resonated with me. And um, there are certain people, certain books I've read that have really resonated. So but I think these books contribute well to the scholarly base. And School of Airs meets people wherever they're at. So if you're a parent or a taxpayer, there are people who own that book and their children were killed in school violence, right? There are politicians that own that book. And but it is I'm just glad I did that, right? Because if I go back 10 years ago to the 10 years old younger doc, right, and say, hey, in the next 10 years, you're going to be on PBS twice, and you're going to write two books under a publishing contract, right? And, and the one's going to have 471 endnotes, and you're also going to have the feature article in Phi Delta Kappa in November. That's done. I just was going through the edit that they got back to me, and like, these are big, big things, right? Professionally, I'd be like, "Holy smokes, that sounds like a lot of work." Like, man, I don't know. Like, someone would tell me, that you're gonna do these things. Like, that is a massive amount of work, and to stick with a book until it's actually done, um, and all the stuff that you change and the proofs and the the site. There's a lot. There's a lot to that is something a book is an endurance test. And I'm really glad that I stuck with it and I didn't give up on either of those. And again, having them through a publishing house that offers you a contract who says, we believe in you and we believe in this work and we're going to do marketing behind it. And people will get a ad on Facebook that, hey, you're searching whatever and here's a book. Um, C&T. Yep. When I lecture, I can't stay in one place. I move around the room. Yeah. You know, I'm going to do a show. I was thinking about this today. I'm going to do a show and it's going to be on what it's like to present on PBS before a live studio audience on a national presentation, right? Which I did twice because there are many things that go into that from the moment you commit to do that and then like 6 months later. But like when you actually do that, you have an area that you have to stand in, and it's really well marked. To me, you can't see it from the TV side, but um, you're really not supposed to leave the podium. Like they have multiple cameras, so they'll cut to whatever you're talking about. Like that'll be up if you walk and you're kind of working with the audience, but they don't really want you to do that. And you never look away from the camera ever. And so I will watch. So like if your presentation is up on a huge screen in back of you, but it's also in front of you. So like, you're really presenting to the people at home, thousands and thousands of people. And this is, syndicated, right? Like it showed in Austin a couple days ago, Austin, Texas. Um, so if you turn and say like right there, um, right, like now you're not looking at the camera. So I don't think I did that when I presented in 2019. I don't know if I did it in 2013 or not. I was very, very good both times. But um, when I watch PBS specials and I see somebody, I'm like, they shouldn't have done that. Like that's a no-no. And you might do it once in a show, or they didn't like cut at the right time because like the person kind of caught them off guard on a live show. But I'm like, yeah, you don't do that. Like you don't hang around the like main screen, right? Because like that is much less resolution than the actual video that they're pumping out to people, right? So as they're cutting between you and the video, like they don't want to really have this screen image up there. So, but I was really good. Like I worked with them really well. I was like a good, like I could probably go back on. I think I have I might have an invite. Meaning, I think when we got done, we said like this would be cool to do a trilogy. Like I was on 2013, 2019. So like 2025, like do another show, like do the trilogy of school safety. So because both of them went well and they had really good ratings and like they're really strongly syndicated. My 2019 presentation is syndicated like nuts around the country. Um, I'm pretty confident like I'd be able to return, like, and I plus have another book. So, right. Those types of things. And, but I don't know. It's nothing I've been thinking about. Nothing in the mix. I don't have any strong. It's great. It's an honor. I would love to do it. But nothing in the mix right now. Um, but anyway, so it helps keep attention to you. So distilling, yeah, move around, yeah. So the PBS thing, yeah, you got rules you got to follow and stuff like that. I'll go through it. It was good, but um, and I wasn't intimidated by it, but like if you're not used to presenting and also like I mean, if it's live and you make a mistake, there's a couple second differential. Like I don't know if it may be 3 seconds. I thought it was two. And that's for as much as me as it is the audience. Like if somebody would do something or cough or something like that in the audience, that they would be able to cut over to just my mic right for that or something like that. I don't know. They That's their thing, right? I'm just there to present. Um, but then I'd like to share that whole experience because what went up to it. And then when I was done, you stay and people's asked questions and that's not recorded, right? So I was there for another 2, 3 hours And then I went out with a group of people that I didn't know who were in the audience. They're like, "Hey, like, do you want to go to like a bar and grill that's down the road?" And I'm like, "Well, yeah, sure." So like, because then you're kind of like the celebrity, right? Like you're the person, hey, this guy was just on TV. And then hanging out with people, till like 2, 3 in the morning who are like interested in school safety and think you're just the greatest thing, right? Because you've just been a national and then they're with you, like this guy. They're introducing you as you're walking into places. So that was awesome. Like, how often do you kind of get celebrity treatment when you're doing school safety? It was like when I was throwing out the first pitch at the minor league baseball game in Duluth. Man, they treated me really well. That was just really a cool experience. Uh, but that's one of the and actually this is one of the things I'm talking about with my students, and I need to talk about it with the university because we're updating what we're teaching. Right, and who covers what during different classes. And I said, like we don't cover um, advocacy, right? We don't cover people meeting with their legislators, and which I've done, and anybody can really do. Like if you're a school administrator, you want to meet with your local legislator, writing a letter to an editor or writing a journal article. There's different tiers that you can do that, or um, just this, or writing to your professional organization, like, hey, like this is going on, and I we have a referendum coming up, and like, or there's these referendums in the state, like put an ad out there, school business association, on why this school building is a good investment because it serves a community, usually over, anywhere from 30 to 50 years or something, to try to help us a little bit. Um, so, I've noticed that today, like I said, there's this gap. And I think I can teach it in my classes, like to bring that in and actually like make an assignment where either you have to a legislator, you have to do. I'll give journal articles where they only a lot of them only take like 700 words, um, and well, something that'll be advocacy, or like one of your state organizations that you have to write to and say like, hey, like um, special education law doesn't address other health impaired, which is students with allergies. So, please, on our behalf, what are you doing on my behalf as like a special ed administrator? What are you doing for this? And anything I can do, if I can testify, right, on this, I'd be glad to do that. So, I don't know. I think that needs to happen. And the thing is, like, I've done that. I've done all of those things multiple times. You don't have to. You're not probably going to get on PBS, right? But um, you know, so that's where I think I don't know. It's just this big hole. And when I talk to people, and no one has done this. No one has met with their local legislator to have coffee and just talk about whatever's going on. And like, if you're a school administrator, like, no, you should do that. Like, that should actually part of your repertoire. Like, that should be something you're doing. Um, you know, 3 times a year or something like that. And actually, as the representative, like, they should be doing that too. So, but again, I don't think no one hears about this. Like, if I don't bring it up, like, they never hear about it. So it's kind of like we're when Graham Wilson was on the show and he's talking about primacy and like new aspiring pilots kind of modeling themselves after what he does, and that's kind of what I have to do. I have to be very overt, and I have to, but not brag, right? I can't be like, oh, I was on PBS twice and I've done this. Um, but it is saying like, you know, I've I've done this. You see me, like I'm here, I'm real. Like you can do this too. There wasn't any special skills I had to acquire or all this other stuff. I just, found the magazines, right? And I would submit an email or a letter saying, "Hey, I want to write on this topic. Would you consider it?" And not everybody published everything I wrote. Although like today that, pretty much anything I write would be published. But do that. Or your legislator, if they, get to your town, like to meet up for coffee and you got a couple talking points, right? Um, So I want to talk about that in a class of like how I kind of did that, like met up with legislators and we would talk about special or safety law in the state, and those are really informal. Like, you just bring a pad folio, and they're not committing to anything. You're not committing to anything. You're just having a dialogue. What's happening down at the state level on this? Who's kind of on board with this? Well, there's a couple legislators, and here's how this might play. Here's like, okay, like what can I do and to, help you out on that, or um, so that's kind of cool. Um, Jordan is saying must have taken a lot of discipline, Doc. Uh, yes. The books took a lot of discipline, and the PBS presentations took a lot of discipline. Um, both of my PBS presentations, I would say, in preparing those, easily 500 hours on my own time, right? To research, to build them, um, to practice them, all of the practice, because you've got to be down to the minute, right? I mean, you've got things notifying you, and you've got 5 minutes, 3 minutes too, but like that has to be a 60-minute presentation, because they have to go to commercial, right? And you don't come back after that. Um, so it is, and then right, everything has to be correct, and you have to get all these permissions. Then just does it land? I mean, and are you splitting stuff up? So you're designing your presentation on what's called constructs. Like, here's where I'm trying to address the legislation of schools. Who's in charge of school safety? So we're going to address legislation in like 4 slides, and then we're going to go through like the psychology of school safety, like social proof and stuff. That'll be like 4 slides. Then we're going to go to mental health. That's a bigger thing, and I need some legislation. That'll be like 6 slides. Then we're going to go over here to like digital avatars and 3D realism as a threat to 3D, and that's kind of futuristic stuff. But they're going to some things I want to put in here in 2019, which are happening now. Like I'm going to tell them where I think things are going. So like that'll be like 6 slides, and then I'm going to end it with like, here are good things happening in school safety by good people like Bart Barta, who does autism training for how a police officer, how to safely interact with students with autism. So meaning like if you come into a building, a student with autism, might have a tendency to move or put their hands in their pockets, which is the last thing you'd want them to do as an officer responding into the building. So how do you practice these successful interactions? And he worked with his son Daniel, who has autism, and they trained together. I mean, they put on trainings together all over the country. So that was like one thing I had. And then I had a few other things. So you like always, not always, like not like a super pro in this, but you have your constructs, you're designing everything out, and like here's the purpose of these slides, and here's the stuff. And some of these things I had to build like these slides, and I had to meet with people in 2013 about this GIS data sets and get those. It was really cool though. Like, but by the time you present, you like know everything inside and out, right? Like, you've got it. Like I mean, then, but yeah, so when people leave, right, you've given them a lot of information, and you're leaving them with hope and positives also, right? So you're taking a very dark, scary, visceral topic, and putting it together in a way that people have never seen it before. For example, like when you go in there and you say, the federal government really does little school safety. It's really the states, and then for the states, it's really the districts. So like right there, people are like, whoa, and then you're like, and yeah, so there's a science to assembling a really really good national presentation, and both of those I think like somebody took one and made it into a college class, the 2013 one, and they just have stood up because they're so well done. But I probably like put in 500 hours. You don't get paid for any of that, right? But like then, everybody in the safety community pretty much knows you, right? It's interesting, because people I get contacted a lot because it just airs somewhere. Um, and locally, it's interesting because it still airs in Wisconsin. And I was getting lined for my weed whacker, and the lady behind the counter is like, "You were on TV at 4 in the morning yesterday." I guess I was, but Jordan, like it takes a lot of discipline in the books to stick with it, because it's you know there's certain things like it doesn't work out, or you just got to ditch a chapter you maybe worked on, um or for something goofy happens with formatting, right? And suddenly you're like, well, what in the world? Like now you're dealing with some weird thing where you've got some formatting thing embedded within a 60,000 word document that you're trying to work out before it goes. And then the publisher sends something back in a proof that when you look at it, it looks weird. When they look at it, it looks okay. So, um, But I think in addition to discipline, there's a level of having to, I think, being a steward of knowledge, right? Like, um, taking taking care of the knowledge base, tending to the knowledge base, because like no one's is doing. I shouldn't say no one, but nobody's doing what I'm doing. Like, I mean, I've got the only PBS presentations on this. Like, that's one of the reasons, I worked with PBS in 2013 because after Sandy Hook, they wanted a presentation on school safety, and there really wasn't anything out there like I had put together for them then that I presented in May of 2013. And then, so you do these things like their School of Errors. Isn't there isn't something very similar to that that is a critique, while also saying here's the path, right, to to do things, which is more on the detection side than it is fortification. And then velocity of information is just a really good, I don't know if it's almost a psychological thriller, um, that's super empirical, right? And it's in vivo, it's in the moment, it's nonfiction, right? But in the 12 interviews, right? And the getting the voice of 12 people to put it together as kind of an anthology. Like that book has a lot of subtle style points I did in it. Like the early chapter about the wildfires in Gatlinburg and Pigeon Forge. If you were to analyze that chapter, all of the sentences are short. And I did that on purpose because you're supposed to feel when you're reading that chapter. It's called The Collapse of Physical Time. You're supposed to read fast and faster as the chapter goes on. It's basically the chapter's trying to roll you down a hill. Like you're going to get momentum as you get into the chapter. And so you're not going to know it unless you're looking for it. But as you read the chapter will force you to read it faster and it will start to foreshadow what's happening ahead. There's a lot of style in that chapter. Um, and it's early on. So you also it keeps your attention, right? And I think it also shows you that, okay, the author is going to take me on some wild turns here, but he's going to have my back, right? He's not going to throw confusing terminology at me. It's going to be relatable. It's not going to be freak out stuff. There's not going to be some like Dennis Miller doing Monday Night Football stuff. So there's a ton of style in that book, and then School of Errors. You'll never ever read a safety book that talks about Hobbes Leviathan, write a school safety book, or that also then spends 2 chapters on the 9/11 harbor rescue, where I worked with you know the New York Department of Planning, and how that works. That just works in that book. Um, you'll never see that anywhere else. I mean, like that's a thing. Like people will say, like AI couldn't generate this stuff. It's kind of weird how I have this eclectic ability to put that stuff together, right? Or to figure out who should be interviewed, and that Clay Martin will be here in this theme, and and so this is pretty amazing because I even look at it and I'm like, well, yeah, like it's a skill, like it's almost a savant level skill for me, and I don't have that in other areas, right? But in this area, I do. Like I'm, and maybe like with the expert witness work, it was why I could handle thousands and thousands of documents and make sense of it, and then put it into like a summary of a 130-page report and get to the main points, with a lawyer of say, well, here's the theme like that showed up, and but you can only see that theme if you went through like everything. Um, so yeah, there's these really deep connections. School of Airs has it, and Philosophy of Information um, has this really deep psychological theme of essential, non-essential, right? Because I brought that up early in the book. I had it later and I moved it with Carl the Barber. So it hits you up like in the audiobook, it's in the first maybe 10 minutes. So like I don't know if you're reading it then right, I don't know, 12 pages in or whatever, but I want it so if you're reading it, I want you to remember the moment you're sorted as essential or non-essential. So that hits you right away because then we have common ground, right? You have common ground with the author because the author was sorted, everybody was sorted. And then you get to read about Carl getting screwed over in Ossawa, Michigan. Um, and then coming out though on it, but then you're kind of thinking like the rest of the book then It everybody falls, essential or non-essential. Everybody that's interviewed subtly, like if you pay attention to it, you'll figure it out. But otherwise, subtly, you still realize it. It just won't be up front. So I did this whole sorting process throughout the book. Um, so it does create this really neat dichotomy. Like it's an interesting book to forensically study as like a professional librarian or stuff like that. Like, and some people have done that and they've talked to me and they've picked up on the style stuff I've been trying. I attempted, which I thought I did pretty well. I think both of those are exceptionally well done, and I worked with my editing team, right, and I worked with my citations team, and um, then all of the amazing graphics that Amy Case DiStefano created for Velocity of Information. But so like when you have something like that, it's kind of a gift to everybody else, right? Like make that book will be impactful for thousands of people for several years, right? And that's been both those books, right? But that's been pretty amazing. Um, and that's kind of the neat thing. But yeah, I don't know. I mean, like now everyone's like, well, what's the third book going to be? Well, yeah, you mess around. You could either go school safety. There's a book there to be written, right? But um, or do you go like in a deeper theme of kind of going from the velocity of information to like the density of facts, something in that theme of saying, the actual authentic truth or whatever that might be, especially in a world that gets less and less truthful, um, it sinks. It gets covered by so much more. So even to try to get to it, it gets harder, right? Because dictionary definitions change. So like the materials you try to get, um, the authentic sources are changed. They're taken down. They're removed from history. History's rewritten. Um, so this whole concept of how the when but see there I struggle because I don't want it to be like gravity, right? So Joe, take care, Joe. So Joe is apparently leaving or left. Um, so Jordan, bigger yet, writing a book through discipline. I'll tell you, velocity of information, Jordan. And I hope you buy the book because I think you'd love it. But I have 471 endnotes, citations. Now they're all at the end of chapters, so when you read it, it doesn't slow you down. That is a massive amount of research to put this book together, right? And it's and these interviews, these 12 interviews, and these are people that don't give interviews. That was one of the things that I wanted to underscore in there. Like half the people, at least that I interviewed, they're like, "I'll do this interview for you, and it has to be transcribed, and I have to approve it and all of that." But they're like, they don't. They're big, and they powerful. They've done amazing things, right? And they'll be like, "I'll do this," but no one else is interviewing me. It's you. So that's been really awesome. Um, and just the process of being disciplined to write every day and I don't know. I'm glad it's done. I'm glad the books are out there and things. And I don't know. We'll see where things go. I'd like to hear the good news first. So yeah, School of Errors is kind of level throughout the whole book. It progresses. Velocity of Information is set up where it does it has I have to tell you what you're going to expect. That's the way that book had to go. Like here's the seven parts of this book or three parts or whatever I did. I don't know. I put everything in kind of parts. I kind of like to do things that way. So it gives you the setup. So you're like, okay, like there's gonna be a lot of stuff on psychology and finite voltage and burnout and so when I get into that, that's gonna be a big section and this will follow it. That works well. Nonfiction, you have to, I think, do a much stronger setup than fiction. Um, I can't drop little clues along the way in nonfiction. Like I've got to kind of set things up at the start. Um, so good news first. Yeah, in schools when I do my PBS presentations, like I'm positive, I'm high energy during those, and I've got a dry humor, right? But completely respectful. So, but yeah, I don't know. I mean, I didn't start. It was interesting when I did the presentation in 2013. I hand them my bio. So when they introduce you, they go through all the things. And that was before I had the PhD, right? And before I had to publish a book. In 2019, I had published a book and I had a PhD, and my bio was really short because I didn't want to listen to my bio. Like I didn't. I'm like just a short thing or like a sentence or two, right? This is Dr. Pro, and he's studies school safety is presented with us in 2013, and so it's really short. And that's how I do anything now. If I go anywhere, I'm like, "What's your bio?" I'm like, "Just here, like it's 3 sentences." I didn't, you don't say did this. I don't, um, they know, like everybody knows they can go on and search, right, if they want to really find out the story. So, um, Bolo saying you have a good chance at living for the next 30 years, 80 years, not so much. Yeah, I don't know. So, um, what is it though? There's a statistic. If you live to be 60, you have like an 80% chance now of living to be like 90 or something. I don't know. I don't know. Um, but I would think the Doc's maybe got 30 years in him left. Maybe. I don't think it's gonna be longer than that, but I would say maybe 30. Um, so Corey's saying I have is it Shala, a Native American war club from my grade 6 art teacher for $30 last month. Oh, that good enough? Whoa, it's cool. Arm the teachers, that'll fix things. Yeah, and there's a number of districts that do that, and which isn't my approach, right? And again, I'm more in the not philosophical, I'm in the policy realm. I'm a policy expert. That's what I'm recognized for. Like, I'm a policy expert. So, when I look at this too, I'm like, the thing is, like, Parkland, nobody really knew the the shooter just left with the students, right? I mean, some of the people around were kind of like, "Well, I think that's the shooter," but the shooter was a student who exited with the student. So as a teacher, how do you know exactly who's you know, is it just one? Is it multiple? What if you pick I mean, there's part of that. The other part is how often are you practicing with your firearm, right? And because if you're law enforcement, you have to, you know, recertify. And, if you, I think I interviewed someone with the Chicago PD and they said, but, there's only a certain level of accuracy you have, right? Like you're not putting everything right in the chest and head. Like some of these bullets are all over the place. You just have to have like a 60% in this range or whatever. But so are you paying for that as a district? Are you paying the ammunition, right, for teachers to go to the range? What is your commitment really to that? Are you doing a firearm maintenance program for them? For cleaning and so these are things. If you go down that path as a district, like okay, I mean that there's a big difference between also right anybody who has a firearm who practices the first month they have it and now they've had it for 7 years and it's still they still have the same bullets in it, right? So those are just i- interesting questions that a line of dialogue that opens up when districts go down that because then they're like, well, okay, but we're not going to. But why wouldn't you then, right? Like if this is your approach and you agree to that as a board in a district, then why would you not say we're going to set so much money aside so our staff have a pass to a certain range, right, that they can go to, or we're going to give them also a credit because we know there'll be an expense for using the range and the firearm, and so like why wouldn't you do that? Um, what is the name of this experiment? Operation Gotcha. Corey saying, I resent being called non-essential by the government. I wonder how they thought that would go next voting season. I resent that approach too. I don't know. I guess I was I had retired at that time, so um, I was doing consulting, and my consulting just ramped up, right? Because everything went online, and people didn't know how to manage school stuff. So I was coming in saying like, here's a so um, I guess I was non-essential, um, but yeah, like that was all garbage. Like how and like our local um, or what is it? Lawnmower place, right? It sells chainsaws and weed whackers, and but they also sold generators and things like that. They were forced to close, and the big box store was open in the next town. So like all these small businesses really got cooked. And this right about that in the interview I did with Aaron Sawyer of Redline VR in Chicago. That's awesome in velocity of information. Um, so that was really a raw deal. And I bring that up with people in my class and my school officials, and leaders, and I say, every one of you and every one of your parents, right? Every one of the parents in your district was deemed essential or non-essential. I'm like, this is a big thing we have to I don't know if it's deal with would be the word, um, but like people are going to make decisions for their futures based upon essential non-essential. Like you're always going to want to have that ability to work remotely or that you're not going to be shut down. Um, and yeah, I don't. It just had such a horrible. I mean, you're calling people non-essential, and then not only that, like you're saying if you're going to be out, you're going to like have the police called, like Bellevue, Washington, that clip I have, and I think there's a big reckoning to be done psychologically with non-essential essential, and it might take decades. I don't know if it'll ever formally be done, but there'll be people going into no doubt into therapy sessions 10, 15 years from now, and they'll be angry because they were deemed their business went under, right? Their small business or their employer they work for, or that their kid's school had shut down, and now like their kid is in high school and they feel they never recovered, and there'd be people that are going to be very angry and bitter, or like that their parent or grandparent was in assisted living or nursing home and they could only see him through a window, like Rollo Tomasi's mom, right? um, so like there's ooh, it's really intense. And that's where I wanted to bring that up early in philosophy of information to get a common point with the reader. Um, Now I want beef stew and to read a book. Well, read the book. Leave a review in Canada. It's a good book. You'll like it. You'll also like the audiobook when that's out there. And I think the audiobook be like 14.99 for philosophy of information. Again, which is really good, 6 hours and 40 minutes. Well done. I don't have anything to do with the pricing of the um, non-audiobooks. The publisher does that. So School of Errors is affordable at like 22 in a paperback, and it's a good paperback, right? It's professional published. It's like 30 for hard copy. Philosophy of information is more expensive. Like hard copy is really just libraries, and people who really want a hard copy. Paperback, I think, is like 30, which I know is still expensive, but um, it is what it is, right? Um, it's you're going to get your money out of it, but I find much of this is over my head, Corey. So um, if I live to be 50, I beat both my dad and his dad before him. Oh my goodness, Corey! Wow. So yeah, well, Jordan, you would. I'm not actually much of a reader, too, to be honest with you. Like, I have a whole bookshelf of books, or I've read a couple, and I just haven't because they're safety or disaster themed books that probably should be in my office. But I love audiobooks, right? Um, but I do think you will enjoy my writing style for either of the books, right? And you can get the audiobook for School of Airs and just skip I mean, you could do that today, but um, I, I, I just think, I don't know. I mean, they're very, very well done. And I think you're gonna find it very conversational. Like velocity of information is very much me talking to you, right? and it's an intellectual discussion around a fire pit, and you're getting introduced to these 12 different people I interviewed, and we're also talking about like this fire in Pigeon Forge, and we're talking about a bridge that collapsed in Minneapolis and chaos, and so it's like all of these things. We're not talking about, oh, there's some theorist of whatever, came up with, that's not part of the game. Um, and and there's a really cool part where we talk, not we, but I'm thinking like we as in like me in the book is, but um, there's a discussion of the, what is it, Rossler, it's before the Rossler tractor. What is it in the book? Ah, I'd have to go back in. Uh, See, this is why I have to like keep listening. So it's when I use the example of the ice cube and the threshold, but there's a name for that. It's not simulated annealing. That's from the other book. I forget what it was because I had to look up the name for it. Um, but there's the threshold, right, of ice. So if you put an ice cube in a drink, like that's a good thing. It lowers the temperature of the drink to the closer to the ideal temperature that you want it to be, and it's gradual. If you have ice that changes temperature on a lake and you're standing there ice fishing and it warms up and you fall through the ice, that's a sudden change. So these dynamics of change, and again, there's a term for that. I don't know what it was, but it was something I had to look up. I found it and then I put it in the book, but now I don't remember what the term was. But then there's this Rossler attractor, which I remember that, and that was saying like, you know, maybe maybe we're still in this big chaos phase, where we're not into a daily torus, which I think we are in this big chaos phase, this huge swing, this huge orbit, and then something can hit it when you're out in chaos and can send you even into like another orbit of chaos. I know it's kind of abstract, but there's like this three-dimension level to chaos, and I don't think we're done with the 2020 stuff. I think we're just at a different level in the orbit of that, the XY orbit of that. So I don't know. I did a much better job describing it in the book. Again, that's where I'm kind of like just writing stuff down, or I did research. Or and then I like would ask someone who's a mathematician. I'll be like, Tim, like, am I interpreting this correctly? Um, Thank you, Safety Doc, for having me. Thank you for all being here. I have to go to sleep. I don't know what I should. Hopefully, something. All right. Well, Jordan, and I need to go to sleep because I got to be moving firewood tomorrow and stuff. So everyone is essential. That's where it really comes down to, right. The whole essential non-essential thing should have never happened, at least with those terms. And um, I I'm just kind of blown away, and that's why when I wrote about it, I'm like, well, just remember, like this happened when I present to people, like a book group, right? um, or some presentation I do on velocity of information. And people, when I talk about essential and non-essential, half the people forget that it happened. I shouldn't say they forget. Again, they oppressed it. They won't recall it until I mention it, and then they'll be like, "Oh yeah, that did happen." And I'm like, "Well, holy smokes! Like, how do you forget? You're 40 years old, right? Like, how do you forget that this happened?" And you can see like this massive, the mechanisms kind of moving, the machinations of the mind, if they're trying to pretend it didn't happen. And of all the things that people forget, or that don't recall, I mean, like you can prompt them along, they kind of recall like the money, the coin shortage, and the grocery store stuff, but they don't remember the morning they were essential or non-essential. So actually, when I teach, I put in my stay, it was March 20th, 2020. I put the date up on the board and I said, something important happened to everybody in this room, including me, on that day. Does anybody know what happened on that day? It's a little bit of a setup, right? And I said, okay, let me change this. Something happened to everybody in this room, plus every one of your students and each of their parents. Something happened that was significant to all of us on this day. And then it'll be, is that the day school closed? Well, no, school actually closed on this day. And I'm like, is the day where everybody was deemed essential, non-essential. So they're like, oh, and I'm like, don't ever do that to somebody, like, right? um, it's 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 just wicked. I mean, that was just nasty. It was horrible. It was just it was a really cruel thing to do. Um, Yikes. So Joe Morris, it's savory word will haunt me. Sweet dreams, Jordan. Jordan, have a good night, buddy. Thanks for being here. Support the show. Say hi to Graham. Um, I'm Graham. He had it looked like he had a poisonous snake on his show, but it wasn't. I'm not essential, but people can still buy and sell property when shelter in place mandate in effect. Yeah, well, no kidding, right? Um, and liquor stores stayed open, right? But grocery bodegas had to close or had to, limit people in. Um, just was nuts. Bolo, yeah, everybody's essential. So that's part of the book, right? So that was as you come to the end of the book does a kind of a recap in it, and it goes and then basically it kind of it leaves you with that. Like, are you how do you determine your essence, right? Is it external? Is it because you have agreed to some mandate by the government? So now you have access to services or people in employment. Is it, is again, it's internal for you? Is it spiritual? What is it? But, um, you know, at one point, right, it seemed that a government or a person could make a decision of your essence if you had value. And non-essential really meant non-value because essence is value. So, and I really push against that in the book big time. I was saying this was garbage, and so hopefully, if you're reading the book and you felt disenfranchised and really mistreated by your government, right, um, and disrespected, right, which is a rightful feeling, I think you're like, okay, this guy gets it, right, and somebody saw this too. Like I was the only one that saw this, right? It's kind of like who else saw the UFO, right? Like it's somebody else saw this. So that's a really keen aspect of velocity of information, and that's what I want it to get. And that's how it does resonate with people. Or if they read it a couple times, kind of, they'll be like, "Yeah, like I'm just glad because I kind of felt really alone, and I kind of felt really bad, and like I had to go to like." We did Christmas and it was this weird kind of mass thing, but like everyone was like, well, hey, like Jimmy is non essential or like, well, Carol is essential, but she's a truck driver and everyone just forgot about her and they closed all the way stations and things down. So like, everybody was kind of like, are you essential, are you non-essential, or you know it was this weird thing, still very weird to this day. I'm glad I wrote about it again because who else wrote about it? Nobody did that. Like so I did research also on this weird part of school policy with suspensions. It's called abeyance agreements, and Pritzker Law School is doing a legal note on this in March, so it's a big thing. And one of the things I was talking to the author of this, and she said like no one else has done the work you've done. Like this, just not there's nobody out there. Like she spends hours and hours researching, and she's like the stuff you do, like nobody else does that. So like thank you for doing this because I'm citing this and build upon it. But I'm like, yeah, it's that was like when I did the PhD, right? I'm like, I wanted to go down and do something that nobody else had done, like into these areas, make this cross field analysis and meet with these people. And um, I don't know. If it doesn't have value, then don't do it and be original and do the difficult stuff, right? Like, um, I didn't get those clubs just for aesthetic values. It's Corey. No kidding. Perhaps we should have our own list of non-essential people. Billy. Oh, Billy, if you're new here, subscribe. Um, Right. What isn't it weird though? It's kind of weird to me that, with an election coming up here in 5, 6 weeks, that this isn't it's not really an election topic, right? And it kind of seems like it would be like this would be something that would resonate with voters, but it's not out there. And I don't think it'll be out there for a presidential election either. It's just one of those things like everybody wants to forget because nobody was good on any side of this. Everybody has some culpable responsibility in how poorly this was handled. So, But, we were much better than that as a nation as I go through, like, and I write about and introduce you to the Committee for National Morale in 1942 and the Road to Victory in, in the Museum of Modern Art in 1943. And just, um, people, we should have our own lists. We already do. Every person who enjoys qualified immunity, Corey. And that's actually something when I talk about in my school law classes, like schools have a very, very high level of immunity. And people who work in schools, as long as you're not doing something crazy outside of your job description. Um, Billy, that's a good start. Corey, Slater, I was hoping you like that one. Good. Corey, I'm old enough, but I barely remember the time back in the 70s when they ran out of gas and they found found some more. Yeah, Corey, we're probably similar in age, right? But I remember that. And it then didn't go like suddenly, like the headline was like discovery of gas in Gulf of Mexico to last 100 years. And even back then, like in like the maybe like the 80s and stuff, you kind of knew at some point like gas wouldn't make sense anymore. Like your technology would just move you beyond that. And now we're being forced beyond it though. So, the whole thing of the rapid you're going to adopt this and what today, the bankers being told by one of the representatives or senators, you've got to, you can't loan, you shouldn't loan to companies that use fossil fuels. Or I think of that would be a death knell to the US, into the whole world. Like, but the thing is like, there's technology is moving really, really fast, materials and all of that. Like it would just happen, right? It would just naturally happen maybe 20 years or 30 years like the technology. So to force it right is really stupid right now. And not have it perfect it and then not, like by me we have the main coal power plant, which was like the power plant of the year like 3 or 4 years ago. Literally, like it had some national award, it was updated with billions of dollars, and then that's shut down now. And we're supposed to here in Wisconsin be living off a new solar farm. I'm like, I don't know, man. It's cloudy, it's winter, we have snow. But again, like there's kind of this weird thing of like we were on a trajectory. Like it would have been pretty I would have expected by the year 2050, let's say, most cars would be electric or maybe like a solid state electric, right? Or something else, but maybe like that, right? And that would just make sense. The technology would be there and whatever. Like it would have just and it was naturally everything that happens like naturally kind of progresses, right? So what's the difference of 30 years? What is the difference of 30 years on a macro scale of now forcing this technology that doesn't have an infrastructure, right? And if you're not using this technology, I mean, as a bank, like you're not supposed to loan to people that aren't using the new technology. I mean, it's just crazy. Um, that's really nuts. Um, All this coming from a group of people who sat there and got lectured to by 12-year-old Swedish girl, right? Who right? You, was didn't she use like a boat to sail across the country? But then like someone did research on all of the resources that went into the boat and preparing it for the thing, and I think it also ran like a motor at one point. And then she was on first class on a train, and it's kind of like Al Gore, right? Like someone mapped out where his jet flies and the thousands and thousands of miles and the thousands of pounds of jet fuel that he uses, right? When hey, your message could be done on a Zoom to people, right? Or something. I mean, if you're really going to talk the talk, right? um, so those type of face validity things are just nuts. um, you know you if so all these people talking about all this stuff and got private jet and 12 homes and that got to heat all of these things and maintain them and abundance and so it's really freaky. I mean, but yeah, that whole thing of giving a platform to you know to her to be the spokesperson. But the media, I mean, and again, the media, that's why tonight I waited for ABC news, and I waited for what the top stories were, because obviously my top story was the economy, and their top story wasn't the economy, and economy was down after the break, so it was like their fourth story. So, you know, I think the third story was still it was the first story was the former president being sued by age attorney general or something. So I'm like, former president, right? Okay, I get this, right? But you know, um, but this is your bias, right? It shows through really strong. This is where you're going versus this is what happened today and the implications and things like that. So I think the former president, right, has become a low key. You can blame anything perpetually onto now this person. Um, and it's like the Norse god Loki, the god of mischief and stuff like that. Bad crops, blame it on the Loki. River floods, get a hole in my shoe, blame it on Loki. Um, like that's the clear pattern, right? Is anything is put it there, or else, like, oh, we have increased smash and grab, like that's the pandemic, right? So you have these things which are post, but you're driving down the road and you're only looking at the rearview mirror. That's all you're focusing on, right? And I so that's just really bad leadership. Like, I want to know how the supply chain is going to get going again. Like, I would like our transportation director to maybe do a presentation in prime time about initiative, get up you get up and go USA, um, and I think a lot of people would. So, but yeah, this whole thing is just like, um, we're not allowed to talk. Yeah, it gets you deplatformed, and as in the book, like I had to be very, very measured, right? And I had member checks, and the editors going through, and the book had to be objective, which it was, but it couldn't be positional. Otherwise, it wouldn't go in libraries, right? And so you got to, um, and one of the things, so there is a very strong chapter of saying, the the doctor in charge, the misstep that was sentinel at the start of this was there should have been a campaign to get everybody as fit as they can, because by his own words was saying, like, he was going out and doing jogs and 7 miles at night, like all this stuff is out there. And if you increase your fitness, you increase your immunity. That's relational, and then you're less likely to get sick, or you're more likely to recover. And those are all statistical certainties proven through the National Institute of Health, all these things, right? Um, Pretty obvious. And he wouldn't go there with that. But, and so I wrote about that, of saying that was a huge mistake. And then actually, when I have my guest on October 10th, we'll talk about, well, what might that have looked like as a fitness expert. Like, suddenly if they're coming to you and you're in a committee, right, and they're saying, what could we do, like, to set up this national program? And part of it would be badging, right? Like, maybe if you participate the first 3 days, you get a 20% off your first $100 at Amazon or Best Buy or whatever companies wanted to participate in this. And then, how do you kind of take it from there? Do you work as a team? Is there a leaderboard? Is there a state leaderboard? Is there a national leaderboard? What are you doing if you're home? Are you just lifting soup cans? Are you walking up and down your steps? But I don't know. But the reason that didn't, there was a few reasons that didn't happen. One is just really poor. There wasn't a committee for national morale, stuff like that. But you would have some people would say, well, if you're doing this, you're, I don't believe in that, right? I think you're pointing me out for fitness, kind of like how California got rid of fitness. We don't see the presidential fitness patch for kids anymore, right? Because people are arguing, well, that is exclusionary. And so I think that there was a lot of measuring of, we don't want to look bad with a few people if we're saying, so all you're saying is wherever you're at in your life, your body, whatever, here are things that you can do. It's not saying, oh, we want you to lose weight or we want you to do whatever. It's like, here's things that increase fitness, and also here's things to eat, and maybe like drink more, and I mean water, and I don't know. I get into it in the book. It's really well done. Um, I thought the one was too obvious, but I guess not too many people saw. Yeah. So I don't recognize this country now as it is. Sad to say, I think 20 years down the line. Yeah, I I'm glad I grew up when I did. And I'm a father, and actually I'm glad my my kids, I'm glad we did a lot of they were able to a lot of things before things got really crazy. Have your bike go around the neighborhood and stuff, and we have the movie theater in town, and being able to see go and see movies, and Wreck It Ralph, and camping and stuff like that. And I I I'm concerned, obviously, about what the future holds for them, and future holds, for any of us, right? And talk about that. So, but I don't. And the thing is, like Billy, I would say, Billy, I just don't see the decorum that people had even 10 years ago, right? So, I kind of joke, I bought my $7 sport coat, right? Every time I present at the university, every time I teach in person, every time I teach remotely in spring, I teach remotely. I wear well, when I teach remotely, I wear a dress shirt and a sport coat. I don't do ties anymore because I just don't like the feeling around the neck, and that's kind of gone out. But um, and I always make sure my hair, is done well, and comb it through. And but when I'm at the university, I have dress shoes, same dress shoes I've had for like 12 years, and shine them up dress shoes, dress pants, a button-down shirt, and a sport coat, and I have the university lapel pin on my sport coat. And every time I teach, because to me it's a privilege, and it's the decorum that the institution deserves, like from me to present myself that way. I don't know, maybe it's this, right? Maybe it's old school, right, or whatever. But and the same thing, I guess, like with politicians, um, and you would at least have expected 20 years ago for politicians in public to maybe make promises and be optimistic that you knew they couldn't carry out. And now what we have a year ago is a president who issues a statement saying it's going to be the winter of death for people, and we have a press secretary who says, if the stock market is getting you down, have a margarita, and go to the gym. Like, those are actual statements, right? Like, holy smokes. Um, I just I just I never thought we'd kind of be in that type of a society. So yeah, so I don't know then how that turns the corner down the road. Um, because I think it comes back to Graham's primacy, Graham Wilson, of saying, like, people will watch what the leaders do or the teachers do. Like, as a flight instructor, they'll emulate what he does, the same mannerisms, the same courtesy with the tower. And I don't know who the models are. I mean, I guess you could say the adults, the parents or whatever, but I mean, I don't know about that. I mean, um, so yeah, I'm just really I don't know what turns it, but it has to be, maybe it has to start with your leadership, right? Is And strong leadership would set the corner on that. Um, but right now, yeah, it's just a lot. It's a lot of entropy, right? And again, people don't want to address the real topics and do the heavy lifting, right? How do we get the actual bridge? The bridge is updated. Like, how do we? Um, how do we do those things? Like, we had some really great things that kind of happened actually during the pandemic, right? The IP rights for ventilator parts and some mask stuff, that was lifted. There was like a reprieve of 100 days or something I wrote about in the book. And you could print these things and give them to the hospital. And you couldn't, like, sell them stuff, but you could print and donate. And I'm like, that's kind of cool. Like, everybody could come together with technology and a thingiverse. And but now we're like 100 miles from that. Everything is like super litigated in IP. And Corey Singh, I got out of the hospital 16 years ago from a valve replacement after I thought about bolstering my FA kit, first aid kit, I was at the dollar store and saw a pack of five N95s, got two packs. Yeah, good thing. And one thing I always do also, like anytime I do any like concrete or any like sanding, I always wear a respirator because there was a guy working on our house when we had our steel siding, and that was back in like 2010 or whatever, 2020. The next project he went to, he was in his 20s, was something with some concrete thing, and then when they got to like the sanding of it, he didn't have a mask with him, and he took in the sand. This wasn't my house; it's somewhere else. He got pneumonia, and he died um, because of that. So, like, I'm very careful, but um, I don't really do much of that now. But Goremonger, to Billy, state of things, we're looking positive toward the future is hard to picture. Yeah, so it's like, these chats, I think hopefully, you can see energy, you can see that there's some commonality of how some of us, think, and I think I do think, I mean, the opportunities for what 3D printing can bring, I think the advancements and potential medical, that we then the quality of life through medical um, can be there. I think there are things that just we're very selfish and bad stewards of things as a pop humans right now, right? And I'm not saying like we're not taking care of necessarily. I'm just saying we're not. Every person's kind of for their own interest in these leadership roles, and they get corrupted, and it's really it's really bad. So and that's where the media, they now have a platform, and if you go against this, the media can just either shut you down, like not give you the press, or they can just focus the spotlight and burn you out, right? So that's kind of the world I lived in with school safety, and I still dance in that. Like I've kind of built the base. It'd be really hard to take down my position, and also like I'm not really selling anything. If anything, I'm just impeding vendors from making more money, right? Um, but yeah, I don't know. I would just love to, I don't know. I don't know about you. I liked a lot of the charisma of Ronald Reagan. I remember Ronald Reagan on the I think it was USS Wisconsin, might have been the New Jersey, when they recommissioned the battleships, and he's on the battleship and he's giving a speech and he's like, "Bring the battleship to life," and they turn the guns around and lift them up. I mean, that was some powerful stuff, man. Some of that early '80s stuff. I mean, I know, right? There's things, but there was a presence, right? That Reagan had. Um, so I don't know. This is the world thanks to participation trophies. Wrote about that in School of Bears. Um, Doc, when you mentioned positive emulation, not sure if leaders or parents are the root cause. I think culture fits in there. Culture is in a perpetual tailspin and it affects other areas. That's a good point, Gormonger. Yeah. Um, one thing is like even like public art and things like that. Philanthropists, right? You go back to like even our city, like one of our largest park in the city was donated by a philanthropist 100 years ago. He had owned a mansion on a hill, which is still there. I mean, not much of a mansion today, just kind of a regular house, right? But um, he had donated this property to the city, and he wanted it to be a park. And I don't know, I, right, culture and culture wasn't the crazy stuff you would have on TV. It was that you have now, right? It's um, I think I don't know. I think culture in the '80s was pretty fascinating. But I don't know. You're right. I don't know what this culture is. It's so the time, like it's like what you can do in a TikTok video of 30 seconds, right? I mean, it's all attention. It's like Johnny Depp said, America's all has become all appetite, no meal, or something like that. Um, so there's something to that. You know it better than I do. You did a good job of stating it. I can't kind of get my head around how to talk about that a little more. Stay in here, enjoy the night. Yeah, it's like 1 o'clock. I gotta be hitting the hay here. Inverted flat spin is more like it. Corey's saying it's the abandonment of traditional family values. Yeah, I agree. That's right. When I went to elementary school, most of my classmates, it was from a stable family structure, and then when I graduated high school, like 80% at least were still there. Like, 12 years later, 13 including kindergarten, like they were still there. Um, but yeah, I definitely think that is a huge part of it, and it's like a general kind of attack on the family, and then um, so Billy saying politics are supposed to be downstream of culture. Is it still? No, I don't think at all. Right, so that's a really good observation. Um, Again, maybe not the rainbows these days. The thing is really weird too, right, Corey? Like we have amazing technology. If you would have told me as a 10-year-old putting away on a Commodore 64, right? Someday you'll have a movie studio in your phone and you'll be able to look at a weather map of a storm coming in, and you'll be able to, I mean, I'd be like, holy smokes, man, that's awesome. And it is awesome. But then there's all this other weird kind of stuff that went up with it. Or that someone, if they had a heart attack, right? Like when my dad had his heart attack, then went to the hospital and they went through with the little thing through his arm and did the stint, and he's alive now 10 years later. And there's a lot of really cool things, like um, prosthetics. As I know a guy who, that's his profession, and he's saying, there's so much we can do with 3D printing and making stuff for people, and the new materials and the ranges and the detecting of their neural stuff. I'm like, that's awesome, right? Like, that's really cool. Um, so there are these things. I mean, like I think there needs to be, but we don't really, nobody curates that, right? There's not like a magazine called The Good Things That Are Happening. That would actually be pretty cool, though. Like, trying to start a magazine be a pretty uphill battle, but or like just a website, right? Called like The Good Things Happening, or someone opens up a Twitter thing, The Good Things Happening, and every day you're curating out things, and that might not be that day, but it might be just general trends, things that are good, and that are good things that are happening, right? Um shoelaces, for God's sakes. God, when I was a kid, a shoelace would last you, what, 4 months, and I have not had a shoelace break in 15 years. So, shoelace technology, right? um what a pain in the ass it was to have spare shoelaces. That one was 48 inches and one is 64. That was a real thing, like back in the 70s. Corey, you remember that? Like, how in the hell, like a shoelace just, but I think there is something to that. It's kind of like that calendar was the far side where you peel off a day, but I'm not trying to really take on a project with that, but I think there is something to that. Because that's just not where people are trained to look. Um, But there are a lot of really cool things. Like, I think, like, um, personally at sporting events, I think like these high definition replay boards and stuff are pretty damn awesome. Um, I don't know. I just think it is. I think it's cool in my car that I have the built-in GPS. Like, that's really helped. I mean, because there's a lot of places really I was probably apprehensive to go when I was driving without one, in the 80s before that technology existed. Um, so full moons, hammocks, and sleeping bags. Yeah. I mean, I would, that's all cool stuff, man. Um, Gormonger, nuclear family was a prime and early target. Yeah, man. It was just, that's sad. Dad had all kinds of info I shouldn't have read, Corey. So, all right. Well, it's only 1:10 in the morning here. When I was when I was a school administrator, I I would work I would work down here every night from 8 or 9 to 10. I mean, when the kids were young, I'd stay up and, we'd give them a bath, right? When your kid's a year old and you're putting the little duckies in the bathtub, and I made sure, right, I wasn't going to take time. And I'd get home, and one of the big things from one of my daughters would be making the bubble wands outside. We had these little rubber balls that we'd bounce from one side of the driveway to these things that she really got a kick out of, right? Or um, and but when that stuff was done, right, the kids are in bed. It really was coming down and opening up and doing all the stuff I couldn't get done at work, right? Because you have all these meetings, other stuff. So you're logging into your email and doing all this side work. And so you'd get done at 1 or 2 in the morning, and then at 6 o'clock I'd be out the door, and that was like many consecutive years. And I was actually when I left that rat race, it's kind of like Aaron Clary. Like there are some similarities. And Aaron's a good friend of mine, and we meet up for lunch and stuff like that. And he gets back to Wisconsin, and I was just like, I'm not gonna burn myself out for all of this. Like I'm just not gonna do it. And that's I changed things up, um, and then also I went and worked at the school for the blind, because like I want to just get I have a lot to offer, but I want to like get connected back into administration at a different level. And that was awesome. Absolutely loved when I was down. Like I said, it's the best job I ever had, and to be an administrator, the best job I ever had. And it would be on a day like today, if it was 75 degrees and sunny. Um, the gym teacher might say, "Hey, like we've got, all of the tandem bikes and the other stuff. Like if we can go out for a ride in the afternoon, so you might have half your kids. So you got 75 kids, you might have half, and you go out for 4 or 5 mile bike ride." And it was the best stuff ever. So, I'm all dressed up in dress pants and dress shoes and sport coat, right? I think I would ditch the sport coat when I was biking, just a dress shirt. And it was the coolest thing. And especially this time of year when the leaves started to fall, the kids would be like, drive toward the curb, because then you're going over the leaves, right? There's really this incredibly uh, sensory input, like to go over the leaves. And but it was one of the coolest things, like to be able to say, not just say, but to have the experience of say, and we maybe did it. We probably did that 7, 8 times a year, between fall and spring, and you could do it. You could do it in that setting, and it was embraced. And we had that culture, right? Um, and no one's scrutinizing it or anything. It was a really wholesome, awesome thing. And um, I was, and actually, when you work with with a student who's blind, um, and they have their cane, right? When the trust a student will give to you, if you're like, just, hey, I I'll walk. Do you want guided assist? And guided assist is when they put their hand under your elbow. Say, would you want guided assist to get to the track faster? Because the track was down a hill, and it just took a while with a cane to get down there. And it was designed that way so kids wouldn't race down to where the track was. Um, and that was a big trust level for anybody to do that, right? Because if you would lead them wrong, you could hurt them or injure them, right? I mean, they could fall or slip or walk into something. So, and we also had these huge tractor tire inner tubes that you could fit like 4 or 5 people on. And the gym teacher was absolutely phenomenal. Put these at the top of a hill in back of the school, and kids would come out there in winter. And as an administrator, like I got to do this too. And you'd go, and there'd be like 4 or 5 of you, and you'd go down this big hill. And I mean, that wasn't that long ago. That was like 2017, maybe, and I don't know, it was just such a genuine good experience. I don't know. I did a show on that. Like I just, I just had so, that was just such a good experience, professionally for me to have that job. Like I said, it was the right time. Like the stars, the constellation, came together to make all of that happen. Um, so it was really, really cool thing. Um, it's wonderful when used for good, terrifying when used for evil. Yeah, yeah, no kidding, right? Um, tech. Not wrong, Bill. Yeah, in tech, like so tech, like we had, they had one of the first 3D printers at the School for the Blind, and they would use it for um, teaching geography, right? And then you would also print like math coordinates would be 3D, and oh goodness, like the the tech stuff was really the voiceover stuff, universal design on apps and like Apple stuff was really getting to be good. So, you know, th- most of the high school students who were blind were on Facebook, right? They had all of their social media stuff. It was all done through voiceover. Um, it was just amazing, like that well, I mean, not that maybe a high school kid being on Facebook, right, and all this the social media, but that was just kind of cool stuff. Blind track stars, that would be cool to see. So yeah, at the track they had h- we had a line, a cord that would run from one side to the other straight on the 100. So you would put your hand on the cord if you're blind and you run down the 100. And then if you were going to do laps, then there was someone you would have that would run with you, right? Um, it, that would be guided. But most of the stuff that they did wasn't like running a mile; it'd be running the 100 meter, and that was a straight line. So you would hold your hand on it. Um, but they actually had football. They also had football at School for the Blind. Not when I was there; it was gone before then. They had their own radio station that broadcast over AM. They had football, they had baseball, and there were very interesting rules on baseball. And but then they have goal ball, which is if you play goal ball, you have to take away your um, sight faculty. So like when I would play goal ball versus like faculty versus students, like you'd have to wear a blacked out mask or goggles, right? So um, and then what did we have? We had pretty much everything, like pretty much a lot of the track stuff. And but yeah, like football, you wouldn't think, right? Yes, at one time there was football, and then the School for the Deaf was about 30 minutes away, maybe not that far. And and but some of these sports kind of went away, but they had other sports. Goal ball again was really big. It's a ball with a bell inside of it, and um, but and then but we had a track that was round, indoor track. It was completely round, right? So it was pretty. You got the kids knew where they were at when they were on the track. Yeah, I'm just trying to. I don't know. There were a lot of cool things, and the kids play video games. So when I was talking to Mike Dahl, the esports stuff, I said the kids would play like Red Dead Redemption, and they put on a headphone set and they in the dorms and they would be playing these games, and like they had no vision of the game. A couple of kids had some level of vision and some of that, but there were other kids who play video games. And one time they invited me over to the dorm, right? So, administrator to the dorm, and I didn't. I'm just hanging out a little bit, um, and yeah, what's going on here in the dorm, and they said, well, Dr. Broden, do you want to play this video game? Like, do you want to be on a team with like this kid and like we'll do like whatever? And I'm like, yeah, and my day was pretty good, but I was just like, and I'm just like, I'm trying, man. I don't know how to do the game. And they just had it down. Like, I don't even know how that happened. It was really amazing though. It was really cool. I saw my first 3D printer aircraft hangar, Alberta 79 or 80. Wow. Wow, Corey, right? Might have been 82, 83 a while ago. Wow. No, it was in California. I remember my dad got me a printed bust of Yoda. Well, that's cool. Um, 3D printing in Braille should be 100% functional now. It greatly increases blended quality. So yes, yeah, you're you're right with that. 3D printing is going to have a huge positive effect on people who rely on tactile Braille. Um, so Yeah, and that's one of those things, right, that could you could quickly, because like if you had something that could print out braille, right? I mean, um, or like you contacted your school for the blind and said, like, I want labels for like these things, they could do that for you. The technology's there, and or the 3D printer, like if you had one, could just make like a they it could do that. Like that software is out there, sure, on Thingiverse. It's got to be. Um, but you could totally 3D print, you know, a park or a house or a restaurant or whatever you need it with the braille, um, in labels or instructions, whatever you need it to do. Um, and actually, they have iPads that have braille that changes as you go page by page. The different pins, the 6 pins, come up and change on the page. So it could be a 300-page book, and every page presents tactily. Think about that. They had that when I was there. So, wow, that was amazing. Um, all right. So, well, guys, I am out of here. Thank you. Subscribe. Tell your friends to subscribe. Subscribe from your 15 burner accounts. And please help with the watch hours, letting people know about the show. I've got some great guests on deck, and appreciate it. So, hey, um, and I do appreciate. Um, hey, Andrew, Corey Gormonger, appreciate you guys. I've got to know you like better now too, right? So, but this has been good. I really enjoy these nights. So, and yes, good. Corey Gormonger, Solitude, Andrew. So have a good night. And I do have a show. Like I said, it'll be, Monday. I'm not. I have a couple things like I'm tossing around for Monday. It could be Peggy, the Comfort Pig. I'm kind of thinking that'll be it. But then October 10th, got fitness trainer on, and we're going to talk about some of the stuff. And Mike Dalla, the esports stuff is going to be really cool too. Um, so CNT, all right, buddy. I will check out that video. So boom, back here on the wall. All right, cool. All right, see you, everybody.